Senator Baker.
Thank you, Mr. Vice President. The bill before us is a very important bill. As we all know, the Insurance Bill 2016. The Honorable Acting Prime Minister, the Substantive Minister of Finance, in his presentation today, laid out the extent to which the bill represents a significant portion of our gross domestic product as an economy, if it were to be juxtaposed against that. The figure of over $100 billion is no small figure. And the impact of this on the entire economic system, as we know it, cannot be overstated. So what I am seeking to do today really is to give some strength to some sentiments echoed prior, as well as to point to some areas that the public should look to with interest as we go forward. Because again, the law is set to assist us in representing the people of Trinidad and Tobago. So as the bill is in its final stages of the process, there are several proposals being advanced to enhance the corporate governance of insurance companies in Trinidad and Tobago. And a key aspect of that is the whole issue of capital adequacy. The minister went at length to explain the 3 million to 15 million, as well as a proportion based on the risk-based assessment of the insurance companies. And I wouldn't go into that too much, but really just to point to the graduation in terms of the transition for insurance companies to achieve the required capital adequacy as prescribed, given that the minimum regulatory capital should be at 150%, and they would have basically 5 years with which to do so, with a scale growing in increments of 10%, from 110 to 120, and so on. And it will come with some comfort to the population that should an insurer choose, Mr. Vice President, not to comply, that they would be met with a $5 million fine. The significance of this is such that it can't go without some perspective. In different jurisdictions where there are much more financial institutions than ours, you would find from time to time, for example, in the commercial banking sector, the central bank would step in to increase the capital requirement, the minimum capital requirement in the respective commercial banks, so much so that it would force mergers. Those mergers would be done with the coordination of the central bank to ensure that the final book that is arrived at is one that will be healthy and will redound to a sustainable and long-term ongoing financial institution. Now, should some insurance companies not be able to meet the requirements as prescribed by the legislation, the insurers should have no fear in that the central bank would then be empowered to ensure that if they can't, and I think if it's not in, because I mean I did make attempts to read the entire document, but some parts may not be coming to me as I'm on my feet. So it would be important to look to ensure that central bank's ability to supervise and to control the decision to enter into mergers and acquisitions of insurance companies, that they can ensure the best fit happens, in that if an insurance company is failing, the central bank can step in and not necessarily close them down because you'll have a lot of claims, but if it is possible to salvage the company by virtue of a merger or acquisition by another insurance company or together with, then that is something to be welcomed, and the population should take some comfort where that is concerned. Another important aspect of the bill, as we speak to risk-based capital adequacy requirements, all right, is the whole concept of stress testing of the balance sheet of the insurance companies. Now, and the Caribbean policy premium methodology. Now, basically, the stress testing for persons who may not be involved in finance is a common thing done in financial institutions where you look at the quality of the assets that you have. And for an insurance company, they may have several investments, some locally, well, the majority, as the law prescribes, I think up to 70% and 30% up to maximum externally. Ensuring that should what the underlying risk of these assets cannot impact negatively on the sustainability of the entity. That's putting it simply. I can put it more simply than that, to simply state that if things go bad, they should be able to honor their obligations. Now, so from the, and survive as a going concern. So from the Bill Essentials, there was a lot of reference to CL Financial and the crisis that ensued in 2009, in January. That was on the backdrop of the global financial crisis, which began in 2007 with the credit default swaps and the mortgage-backed securities. I will be speaking to that later on in my presentation, because in Trinidad and Tobago, we do have mortgage-backed securities, at least in the Home Mortgage Bank, which they refer to as asset-backed securities, which are in excess of 600 million at the 2016 financial year end. But I will be dealt with regarding the capital adequacy and the whole issue of systemic risk. Now, the bill seeks to reform the law relating to insurance companies. And for anyone engaging in business activity, utilizing a vehicle, preparing for posterity, whether it be a life insurance, whole or term life, health concerns, every individual interacts and interfaces with the services of insurance companies. And therefore, as a result of that, it goes without saying that this is a very important reform process. And the over a decade-long time in joint select committees really makes that a true statement. Now, it also seeks to regulate insurance businesses. And there are some schools of thought, Mr. Vice President, regarding the regulation of insurance companies. And one argument advanced by some insurance companies, not necessarily locally, is that regulation is incompatible with competition. And there's a submission from J. Robert Hunter, Director of Insurance at the Consumer Federation of America, before the Task Force on Long-Term Solutions for Florida's Hurricane Insurance Market of November 14, 2015, Why is Regulation of Insurance Necessary, being the full title of the article. It states, the insurance industry promotes a myth, and I read with your permission. Regulation and competition are incompatible. This is demonstrably untrue. Regulation and competition both seek the same goal: the lowest possible price consistent with a reasonable return for the seller. So, the lowest possible price consistent with a reasonable return for the insurance company. So if both pursue the same possible goal and that there can be harmony can be found in regulation, then why not regulation? And there are 5 reasons advanced in the article for regulation, which are insolvency, unfair and deceptive policies and practices, insurance availability, reverse competition, and consumer information. Now, the crisis that occurred in the United States with AIG, given the heavy involvement of credit default swaps and the inability to honor claims, resulting in the crash of that conglomerate, is a clear example of where insolvency can bring down systemically the entire sector unless the government intervenes. The issues we had here in Trinidad and Tobago with CLICO, again, brings that to light, albeit under different circumstances. It really had to do with the quality of the assets of the group that CL Financial administered, of which CLICO was an important player. The unfair and deceptive policies and practices are a clear reason for a regulator to step in. And they made the point here that insurance policies, unlike most other consumer products or services, are contracts that promise to make certain payments under certain conditions at some future time. So the challenge with insurance versus other types of business requires regulation, because the insurance really, once you enter into an insurance contract with an insurance company, there is a promise to pay given certain conditions, where the insurance company is truly a sophisticated party, and the majority of the users of insurance would be unsophisticated, in that they would not have superior knowledge, there would be asymmetric information as well, and they will not really be empowered to be aware as to whether or not they're being fairly treated regarding price and regarding service. A plain example could be gleaned from the insurance that many people are familiar with, which is the motor vehicle insurance. And you may place a call to an insurance company and say, okay, I'm interested in buying a new car, and they will tell you your premium might be $20,000. And then you say, well, how? Why? I find that should be, that's unfair. Why don't you give me a lower price? And they might tell you, well, that's the policy. And then you call back and say, well, I have a better offer. And then for some reason, magically, the computer generates a lower figure with the same, quote-unquote, level of coverage. Now, if this is not an example of unfair and deceptive policies and practices that pervades, at least by popular opinion, not necessarily by any scientific review of the scientific research on my part, if this is popular opinion that insurance companies tend to take advantage of that, then really and truly, that should be enough cause for us to bring insurance under regulation. Another thing is reverse competition. So where insurance companies market their policies to a third party, for example, you go to the car dealer, and the car dealer may tie in an insurance arrangement, a contract, via a company that is also part of their group. So you have conglomerate activity, excuse me. So you have group behavior, whereby the group may own an insurance company, or vice versa. The insurance company may own companies, subsidiaries that are engaged in motor vehicle sales or health care. By virtue of this, they may increase the premiums to increase their profitability, which really results in a beyond normal higher price for the final consumer. So without regulation, the prices that the consumer pays are higher when there is reverse competition. So once the regulator steps in, and there are prescriptions in the bill that deal with companies acting as a group, so group dynamics as well, the Honorable Acting Prime Minister did make mention of the fact that they would have to present their consolidated financials, as well as the financials of the insurance company separated from that of the group, as well as information for consumers. So that be information to consumers being the final point, in that the consumers really and truly are not in the know. There is asymmetric information, and only if you are behind the curtain, you can see who the puppet master is and what benefits really should abound to you. And in this modern time, even though people are saying that regulation should not happen, the industry may be able to be self-regulated, technological advances, as I said, misleading practices, and conglomerate behavior are reasons advanced that so advanced to promote regulation of insurance companies. Now, the bill also seeks to strengthen the prudential requirements, Mr. Vice President, of the sector, including the introduction of risk-based capital and financial standards. Now, one important institution is the IAIS, the International Association of Insurance Supervisors, which they constitute 97% of the world's insurance premiums in over 200 jurisdictions. And they have founded the principles that have been cited and referenced throughout this entire bill. All right? So there's one point I want to make. Globally, there is a trend, and because this trend exists globally, it may find itself to our shores if it hasn't already. That is microinsurance. All right? So in some markets in Latin America and other parts of the Caribbean, as well as in Africa, there's a diverse range of intermediaries which have brought insurance products and services via utility bills, supermarkets, other less conventional players. For example, mobile companies sell microinsurance, where you can pay a weekly rate at a very reduced price. In certain parts of Eastern Africa, where mobile money is prevalent, microinsurance is something that is a key feature of the insurance landscape, which really is used to bring persons into the insurance sector. In some of those markets, you have market penetration figures of less than 10 and 20%. So microinsurance is one avenue to widen the insurance net. And it's something that we should look at in Trinidad and Tobago once we frame legislation to ensure that if it does find its way here, companies that peddle in microinsurance could be covered in the law. In the law, I saw there was mention made of who can sell insurance. But given the trend of microinsurance, which allows basically almost any consumer interface to peddle insurance for an insurance company, we would want to take a look at that. So the supervisory system. We can only welcome the central bank being involved in the supervisory system for insurance companies. We can only welcome the inspector of financial institutions being involved in that regard. Not being part of the Joint Select Committee, you would depend on the report. And as I said, I may not recall all the clauses as I'm on my feet, all the aspects of the report of the Joint Select Committee as I'm on my feet, but it will be good for maybe the Minister of Finance in his wind-up to give some explanation as to what is the strength of the central bank regarding supervision of insurance companies in particular. Not where they share staff, but the dedicated staff solely to insurance companies. What is the current number, and what is the planned increase given the level of intimacy they would need to have with insurance companies. Now, because the inspector of financial institutions, where an insurance company is concerned, will have wide-reaching powers. And we would not want that due to a significant increase in the workload of the department under the inspector regarding the insurance companies, that they do some shoddy work, not to cast any aspersions on persons at the central bank, because we know, really and truly, those persons work very hard to ensure the financial integrity of our financial system. Now, credit exposure. Credit exposure basically occurs once a company provides a loan, and where the lender's ability to repay is compromised, then you may have the risk of credit exposure. The credit exposure is significant, and the risk of default is also significant. So where credit exposure is concerned, you would want to ensure the capital adequacy requirements of the insurance companies are up to mark. And an inspection into the quality of the assets is a time-consuming matter, and it's a matter that requires definite skill. And this brings you back to the whole question of the Inspector of Financial Institutions, Mr. Vice President, because a simple example, when we had the short recession, the beginning of the recession in 2016 around there, many companies in Trinidad and Tobago dealing with the financial institutions had to face stress testing of their balance sheets. But these were companies in every sector, including, well, it would not have included insurance companies necessarily. So, but banks, commercial banks, have the ability, based on the strength of staff, to stress test their clients' balance sheets. But those clients exist across different sectors. The question is, does the central bank have that cadre of professionals in the number required and in the skill level required to complete the task? So there's another point regarding credit exposure, and that is the need for public education. Now, and also an issue of widening the net. For example, if one goes to take a loan or they go to courts, so they go to a bank, a major credit union, or they go to a Courts Furniture store to purchase something, they would run your information through TransUnion, which is basically the credit bureau that pervades in Trinidad and Tobago. Now, if you belong to a small credit union, your transactions there may never come up on TransUnion. All right? If you pay your rent or don't pay your rent on time, that does not come onto TransUnion. So you may have a situation where there may be companies, for example, that don't pay their rent. This really can impact on the risk assessment and the risk profile that the insurer will place on that particular company. Bearing in mind that insurance of property is important for businesses as a going concern. If you are a tenant in a building and the landlord is not servicing his insurance obligations, that can be a problem for you. If you have a business, there's a business which workers depend on for their livelihood, and the business owner is not paying his rental obligations, you would want that to feature somehow into their risk profile. All of this would bring more responsible business activity to bear. So the point I'm trying to make, Mr. Vice President, is that as we look at this bill, we would want to consider other measures apart from this bill regarding broadening the ability and strengthening the ability of the central bank to assess the creditworthiness of businesses and individuals. And one way they can do that is by bringing landlords into the net, at least the large landlords with a minimum maybe of 10 apartments, properties, or commercial shops for rent under the credit bureau that we know as TransUnion today. The other issue, the public education. Because, well, for those who watch cable television, all the advertisements are there. Credit checks, credit checks, credit checks. But for persons in Trinidad and Tobago, those advertisements may not be that relevant to our existence. So you may want to engage in some level of public education where maintaining a healthy credit rating is concerned, and the impact this can have on your ability to access finance, your premium, the premiums you may be required to pay in the future if it's not at present, with insurance companies, etc. And I think if the government can look at that avenue, to empower the central bank, or the government via the Consumer Affairs Division can look at empowering that division to bring those advertisements to the public or the financial ombudsman, whoever it may be. It would help definitely with this, so that it will improve generally our approach to credit risk and credit worthiness in Trinidad and Tobago. Now, Mr. Vice President, the other issue regarding the issues that I raised earlier regarding the consolidated supervision and the holding company structure is present in clause 47, where the central bank has the power, where a local insurer is a member of a related group, of two or more financial entities to direct them to restructure the financial holding form. Okay? Now, that is very important. And we have, besides CLICO, we have many other insurance companies that operate either loosely as part of a group. I guess Tattle may be one of them. Answer Insurance Company. So you have many insurance companies that actually operate as part of a group. And obviously, it's a very easy concept. Because, for example, in other jurisdictions, where you have much more financial institutions mushrooming because you don't have as much market penetration for insurance and financial services. Many companies emerge. You find that it's an easy form of building a conglomerate. You get shares. You have a minimum capital requirement that may be, well, in this case we are raising it, but initially it was very low. So if you had $3 million minimum capital requirement for an insurance company, and you can welcome $100 million via premiums, of which in the first year you take 65% of that. You know, it becomes very easy now with these premiums to create counterpart companies. And those counterpart companies are created in such a way to act as suckers, to usher much more financial services to the insurance company. So you'll open a car sales company, so you'll get the car insurance coming to you at a discount, supposedly. You'll open a appliance company. You'll go into real estate, and you will offer the insurance component coupled with the real estate services. So it's a very easy way to build a conglomerate, you know? And so these companies would have been operating in that old regime. That regime still exists today. So it will be very important to ensure all companies that operate loosely as groups, given there may not have been a requirement to disclose group activity, the central bank would be that's a very difficult task to identify the true groups, the true conglomerates in Trinidad and Tobago, because not many companies disclose or act in such a way that would give you the perception that they are actually they're acting in concert with similar beneficial owners. Now, ICP 17, Insurance Core Principle 17, provides a globally accepted framework for the supervision of the insurance sector. All right? And the material is presented according to a hierarchy of supervisory material. So the supervisory regime is done in such a way to promote a financially sound insurance sector and adequate level of policyholder protection. So this is what we are talking about today, policyholder protection. Now, before I rose, Mr. Vice President, the issue of derivatives was discussed. And based on a word search for the words or groups of words, derivative or credit default swap, in the report of the GSE, not the bill, so I apologize for that, I did not see any real mention. The only mention I saw of derivatives was on page 233, where it states counterparty, so an explanation for the word counterparty. For the purpose of measuring a credit exposure means the borrower, the person guaranteed, the issuer of a security in the case of an investment in a security, or the party with whom the contract is made in the case of a derivative contract. Mr. Vice President, that is the only mention made in the Joint Select Committee report of 500 and probably 6 or 12 pages of the term derivative. Now, there was another mention of derivative, but it wasn't with respect to a financial product, right? It was the English use of the word. Now, so locally, the Home Mortgage Bank engages in asset-backed securities, which basically are mortgage-backed securities where they operate in the secondary market. So your financial institution would provide a mortgage for all of us, and they would engage with the home mortgage bank in the secondary market. And the home mortgage bank would float bonds to other financial institutions, maybe NIB, for example, offering them, at this point, I believe it's 1.5%. Well, at least as at September 2016, it was raised to 1.5% from 1.35%. And they would live within the margins. All right, so they offer that, and they will raise maybe about 6%, depending on the rates that they can get in the secondary market. So they would operate in the margin, and they will do very well because they shouldn't have a significant staff complement because they don't have to market to many people. Now, that model is a very simple model. However, given that home mortgage bank, I believe, should be the main, or if not the only, company that engages in that type of activity at that level in Trinidad and Tobago, it raises a very significant question. Given that mortgage-backed securities was one of the main reasons, was accused to be one of the main reasons for the financial meltdown in 2007, along with another financial derivative, credit default swaps. Are we now looking at this in Trinidad and Tobago? I don't think the legislation really is framed to look at this, but it's something that we should bear in mind, given that this debate has mentioned it. All right? But this debate only mentioned it by virtue of the credit default swap, which is an insurance product. So I believe that we should, Mr. Vice President, find some time in the future, the government, to look at mortgage-backed securities. Because in 2016, September 31st, the Home Mortgage Bank had under management $643.9 million. All right? Regarding the Mortgage Participation Fund, which was a 30% year-on-year increase. So it's increasing. And if it's increasing and it's significant, and they are the main player in the market, you would really need to focus on that, all right, to see if there are any attendant risks that could affect the integrity of the financial system. Now, the credit default swaps, I think, because the Select Committee didn't mention it, I believe the law probably would not have, the bill probably would not have addressed it. I believe that the government must, look at credit default swaps and really and truly make an assertion as to which specific instruments they would allow insurance companies to engage in. So if central bank is the regulator, given that the law has not addressed credit default swaps, which was the main reason for the financial meltdown, then and given that the insurance companies will be allowed to foreign investments of 20% to 30% in their mix with local investments, then the central bank should really have a tight handle in terms of control on the ability of these insurance companies to engage in these type of financial derivatives. Because if the insurance companies don't have sophisticated, if in America, in AIG, they were not sophisticated enough to foretell the failure of that instrument, I'm not sure we want to follow where they have been burnt. So the shortcomings of the current Insurance Act should be addressed significantly with the capital adequacy increases. However, the risks associated with the credit default swaps and the other risks regarding mortgage-backed securities should also be looked at in the context of the industry. Now, in wrapping up my contribution, Mr. Vice President, the Caribbean Policy Premium Method that the Honorable Acting Prime Minister mentioned really and truly laid out some clear guidelines as to how the risk assessment of the insurance companies should be engaged in. And I believe that these things are important going forward. What is more important now is once the law has been assented to and proclaimed, the central bank should be very clear and very deliberate in its communication with the population to avoid what happened post the CLICO crisis.
Senator, you have 5 more minutes.
Thank you very much. I wouldn't use all of it. All right? I'm actually wrapping up. So basically, there was an article on the 7th of January 2018 in the Newsday titled Insurance Frustration, where basically someone wrote a letter to the editor, a short 1 paragraph, stating they lost their son in a vehicular accident in June of the last year, and the insurance company has been giving them the runaround in getting what is due to them. And I believe that, yes, we have a financial ombudsman, but the other question, just as with central bank, is the financial ombudsman really adequately resourced with technically sophisticated personnel to deal with the matters that will arise from the increased regulation and supervision of insurance companies? And with that point, I conclude. Thank you, Mr. President.
Senator Srikisun.
Thank you, Mr. Vice President, for recognizing me and allowing me to make a contribution to this insurance bill before us here today. Mr. Vice President, as I begin, I know that a lot of work has been done and has gone into the preparation of the bill before us. And I think it's I think it is noteworthy to commend all those who participated in the Joint Select Committee. And I would also like to recognize the input of the 2 members of the independent bench, Senator Creese and Senator Jennifer Raffoul, in their contribution. So I think this bill has had a lot of history, has spanned a long time, and I think its implementation is very critical to the advancement and protection of the financial sector of Trinidad and Tobago. Mr. Vice President, as I would begin, the original Insurance Act of 1980, Clause 4 says, the minister may designate a person employed in his ministry to be the supervisor of insurance. Clause 5 says, the supervisor shall be charged with the general administration of this act, and in the exercise of his powers and the performance of his duties, he shall conform with any general or special directions given to him by the minister. So we're seeing here in 1980, the role was really given to the supervisor of insurance. In the second session of the 8th Parliament of 2004, Act number 15 of 2004, Section 4 of the Act was repealed, that I just read, and it was replaced with effect from the commencement of the Insurance Amendment Act 2004, the central bank shall be charged with the administration of this act. So, Mr. Vice President, what we saw initially in 1980, there was a supervisor of insurance, but in 2004, the supervisor essentially became the central bank. And why am I making that point? We've heard a lot about the CLICO debacle, and we've heard why the reasons or what was going on in the financial markets at that time, which caused a liquidity strain on that company, and then its collapse after. But the point that I am trying to raise here is that while that did occur in roughly 2008, it was, in my view, the period under which the CLICO company came under the purview or the regulation of the central bank. It was that important occurrence in my mind that started to expose the problems of liquidity and other problems in CLICO as to be the central bank would later discover. And if I am to remember correctly, the central bank went through severe pains in trying to acquire the information which the Act had just empowered them to do. And because the company was a private company, not being a public one, the difficulty in collecting the information was there was significant difficulty in collecting the information. So that role that central bank was really playing there as and performing their oversight function, in my mind, is what really brought the problem to the fore at that time. So The role of the regulator in this case was absolutely critical in unearthing or detecting the possible damage that could have been caused or that was caused, but it was unable to prevent it because of the short time that they had and the difficulty in obtaining documents. And therefore, it is against that backdrop of the damage to the Trinidad and Tobago's financial sector and the burden of that company that it placed on the economy of Trinidad and Tobago, and still to date, 2018, the Trinidad and Tobago government has not been able to really retrieve the investment that they placed in the company at that time. And it is against that backdrop of sound financial impact or impact on the Trinidad and Tobago economy, promoting confidence in the Trinidad and Tobago economy, that I would really like to spend a little time on my presentation, where the role of the regulator and the way in which these companies are managed need to be done in a way that it promotes financial soundness in the Trinidad and Tobago's economy. And therefore, it is against that backdrop that I propose in my brief presentation to really focus on the sections of the Act that pertain to administration and supervision, corporate governance, and financial statements and returns. Mr. Vice President, Clause 7 of the bill introduces the administrative functions of the central bank as the supervisor of registrants. In the light of the CLICO debacle and the impact on Trinidad and Tobago, I strongly support Clauses 7.2 and 7.3, which states, the primary objective of the central bank in respect of the registrants is to maintain confidence in and promote the soundness and stability of the financial system in Trinidad and Tobago. Clause 3 says, 7.3, the other objectives of the central bank in respect of registrants are to promote the existence of efficient and fair insurance markets and maintain an appropriate level of protection for policyholders and beneficiaries. Those two clauses, Mr. Vice President, in my mind, really represents my interest in this bill as it seeks to guard against these shocks that can be caused by companies that are not well managed or regulated. Clause 7.4, from Clause 7.4, it begins to outline the reporting relationship that would occur. 7.4 says the governor shall keep the minister informed at least once every 6 months or more frequently if the need arises. And Clause 10 of the bill introduces the role and function of the inspector. 10.1 says the inspector shall have the powers and duties conferred on him by this act. So what we're seeing here is the inspector analyzes the performance of the insurance company or the registrant. The inspector reports to the governor of the central bank. The governor of the central bank keeps the minister informed every 6 months, at least every 6 months. And the central bank shall provide a written report annually to the minister with respect to the central bank meeting its objectives under this act. That reporting relationship of registrant, who reports to the inspector, who informs the governor of the central bank, and then who keeps the minister informed, in my mind, is a key chain or key reporting chain that, once adhered to, can protect the Trinidad and Tobago's economy. And therefore, in my mind, the addition or the way in which it's structured in the bill brings strength to the financial sector. I really support this. Clause 10 of the bill, duties and powers of the inspector, subsection 3, says, the inspector shall make or cause to be made such examination and inquiry into the affairs or business of each registrant, financial holding company, subsidiary or branch, as he considers necessary or expedient for the purpose of satisfying himself that the provisions of this act are being observed. My one point here, or recommendation at this point, is that given that the function of the inspector is very important, and the inspector is viewing or overviewing the registrant, the financial holding company, the time period allocated according to this clause says, as he considers necessary or expedient, and that can span any time. And I am saying, in order to lend strength to this area of oversight, I do believe that there should be at least a minimum reporting requirement in terms of a time frame for the inspector to be viewing or handling handling his oversight function of each company. And I want to propose, according to this clause, for it to read, as he considers necessary or expedient, but at least annually. So that is to say that the inspector will at least once a year present or perform an oversight function of each company, and not just as he considers necessary. It forces the hand of the inspector to take an annual look of each company. Clauses 10.3, 10.4, and 10.5 of the bill make specific reference to the inspector as the inspector seeks to carry out his role and functions as conferred upon him by the bill. 10.3 says the inspector shall make or cause to be made such examination and inquiry into the affairs of each business. 10.4 says the inspector shall make or cause to be made such examination and inquiry into the affairs or business of a member of a financial group, in the opinion of the inspector, such examination and inquiry are necessary to assess any risk that such member may pose to the registrant. And 10.5 says the inspector shall make or cause to be made such examination into the affairs as it pertains to an examination and inquiry to verify that no business activity is being carried on other than applicable to the representative under this Act. My point here is this. To whom is the inspector reporting? Or to whom is he writing? And who is going to respond to the inspector? Is he going to send a general letter to the company? Is he going to write to the board? Who is it that's liaising with the inspector? And I would like to say at this point, I propose for strengthening of this Act that a compliance officer be included in this bill, so that when an inspector requires information or is monitoring any element of that company, that the inspector has a direct go-to person who is responsible for providing all the information to and through the inspector. That will allow a proper reporting line that the inspector can go to get any additional information he wants. The level of compliance with this Act that the inspector requires, that one office, the compliance office or compliance officer, will be able to address that. So I am saying in terms of a management issue of the information, while the bill is very detailed as to the information that the inspector requires, how is the inspector going to collate or collect this information, and who is responsible? And I think a specific office, given the voluminous requirements of the bill, need to be established for a proper and clear reporting guideline. Mr. Vice President, 10.7 goes on to say, if an examination of the affairs of a registrant, financial holding company, or other member of a financial group reveals that the registrant, financial holding company, or other member of a financial group is conducting its business in an unlawful or unsound manner, or is otherwise in an unsound condition, the inspector may require the registrant or financial holding company or other member of the financial group forthwith or within such time as may be specified, take all measures as he considered necessary to rectify the situation. I would like to see here, and while I agree with the clause, I do believe that the registrant or the insurance company needs to be notified in writing of its unsound or financial condition, and therefore will be required to execute the suggestions of the inspector. So I do believe in being informed in writing is very critical here at this time. But continuing with that thrust, 10.8 says, Clause 10.8 says, Clause 10.8 of the bill provides for the consequence of ignoring the advice of the inspector. It says here in 10.8, a registrant or financial holding company that fails to take the measures required by the inspector pursuant to subsection 7, which I just read, commits an offense and is liable on conviction on indictment to a fine of $600,000, and I'm skipping now, or on summary conviction to a fine of $300,000. So here it is, an inspector is examining the affairs of a company and has determined that, hey, something is wrong here, and I do believe that this company is in an unsound manner, and therefore corrective action needs to be taken. The company is notified, the company challenges the inspector, and it goes to court, because that's what we're seeing here. Here's the question. Given the court system in Trinidad and Tobago, it's going to take a while to get a conviction. What happens to the financial condition of the company during the time the case is being prosecuted? And therefore, the unsound financial condition of the company may continue to exist until such time that a court delivers a decision and the company is found to be liable. If the company was not found to be liable, it's okay. But if the company is found to be liable, then that duration of being unsound or insolvent, then what happens to the operations? There is a gap, and I think it needs to be addressed. And I would just like to say, to propose, that when, as a suggestion in this case, that when the company refuses to comply with the directions of the inspector, then there should be a limit on any new business that is being undertaken by the company until the matter is resolved by the court. Mr. Vice President, Clause 10.9 of the bill continues to say, the inspector shall take and maintain such steps and proceedings as may be necessary for the winding up of the insurer. So 10.7 says unlawful, unsound manner or insolvency. 10.8 is the penalty. And in 10.9, we're seeing the inspector winding up the company. I would like to say, under what conditions would the inspector have the authority or what conditions must exist for the inspector to begin winding up proceedings? We can't just have a clause that says the inspector shall take and maintain such steps and proceedings as may be necessary for the winding up of an insurer. Something must be going on. Some metrics must be used, and there must be a condition that is being presented. The insurer, the registrant, must be unable to meet the requirements, and only then the winding up should occur. So I'm asking for some element of further analysis or further discussions with respect to 10.9 to determine the conditions under which winding up would occur. Clause 10 sub 11 of the bill also speaks of removal of documents. And I think it's very important for the oversight function to be performed by the inspector and they having access to information. I agree with that. But Clause 11 says the inspector or any person authorized in writing by the central bank or any designated member, and I'm just skipping down, that now says they will be required to, or they are allowed to examine, make copies of, or remove from the premises all books and records. And I'm okay with that to a point where the examination of the records should be made available to the inspector or his agent. I'm agreeing. But in terms of the removal, I do believe that the removal should be with the cooperation of the registrant. It shouldn't just be removed. And why am I saying that? Because if the registrant refuses to give the information, Clause 13, 10.13 goes on to say that notwithstanding subsection 11, the inspector may apply to a judge of the High Court for an ex parte order authorizing him or any person authorized in writing by the central bank to enter into the premises and to retrieve. So I don't think that it's wise or it's prudent for us to just be able to empower an officer to go in and remove. Examine, yes, fine. Analyze, yes, fine. But to remove without the consent, I'm a little bit concerned, especially where there's a condition in the law that says if you refuse, we can apply to a judge and collect. So it's not to say that the information cannot be made available. So I'd like consideration to be given to that. Mr. Vice President, that was the first part of the administration and functions of the inspector. The second part of the bill which I propose to deal with is Part F, which specifically refers to the corporate governance aspect of the bill. Mr. Vice President, Clauses 65 to 81 addresses the corporate governance structure being proposed for the operations of insurance companies. Clause 65 deals with the persons debarred from acting as directors. Clause 66 deals with restrictions to voting as officers. Clause 67, duties of directors. Clause 69, the establishment of an internal audit committee, which shall consist of at least 3 directors. The Honorable Minister of Finance, in laying it, spent some time on explaining the internal audit committee. Mr. Vice President, the section of corporate governance here refers specifically to the board of directors of the company. Clause 69 talks about the audit committee. But Mr. Vice President, the bill in no way in the section on corporate governance does not prescribe that an insurance company or the registrant be managed by a board of directors. So from where are we pulling these directors for the internal audit committee? It further does not specify how many directors are to be executive or non-executive, and it does not specify how many should be independent. And therefore, the board of directors, which we are saying should be the management of the insurance company, its composition in terms of number, in terms of executive and non-executive, and in terms of being independent, that is not constituted in the bill before us. And this clause, which the Honourable Minister of Finance addressed in Clause 68, says here, in Clause 68, when it speaks to the internal audit function, it says here, so thank you. With respect to the internal audit function, it says the board of directors of an insurer shall appoint from among their number an audit committee which shall consist of at least 3 directors. And it goes on to say the majority of whom shall be independent, at least one a financial expert, and at least one independent director shall not be a director of a connected party. We've specified the constituent or how the audit committee should be comprised, but we never specified how the board of the company is to be constituted. And therefore, I ask for some element of attention to be given to that. Section 75 of the bill pertains to the appointment of an auditor. It says here, as I just read, Section 75 pertains to the appointment of the auditor. Section 68 of the bill, which I just read before, establishes an audit committee. Mr. Vice President, there is a fundamental difference between the internal audit function that is performed and the external audit function. The internal pertains to the internal controls of the company, and the external pertains to the financial statements and the reporting of a company by an entity outside of the company. And I'm making this fundamental difference to say that in Clause 75, which pertains to the auditor, it does not prescribe that the function needs to be performed by an external auditor. 68 talks about internal, 75 just talks about auditors, and I'm saying for the law to be sound, it should specify the external audit function. And so I do recommend that everywhere the word auditor is seen in clauses 75 and up to 77, that the word external be inserted. For example, 75(1) says, an insurer and a financial holding company shall appoint annually an audit entity satisfactory to the central bank to be its auditor. I am saying the inclusion of the word external is critical for it to state that an insurer and a financial holding company shall appoint annually an audit entity satisfactory to the central bank to be its external auditor, especially in the light of Clause 68, which talks about an internal audit function. Just to give an example again, 75(2) says an audit entity is qualified to be the external auditor of the insurer or financial holding company if it meets the following requirements. And so I'm asking for the consideration of external being specific to this audit function. Mr. Vice President, with respect to Clause 78 to 81, the actuary that is being sought after here, it is saying here that clauses 78 to 81 deals with the appointment of the actuary. And I would like to read. 78(1) says, an insurer carrying on long-term insurance business or a general insurer carrying on the accident and sickness class of insurance business, and every other insurer that is required by the inspector to provide actuarial reports shall appoint an actuary pursuant to subsection 3. We're seeing here that the clause is very specific that an actuary is required by the insurance company in order to report and to provide the correct details. Just on a side note, clause 78(3, and I want to read it exactly as it is in the bill, it says, an insurer shall not appoint a person to be its appointed actuary, and it continues to say, required to submit a report or certificate to the inspector. I do believe that something is wrong with the wording of the clause, and it just may need to be corrected because it's clearly a typo, because it doesn't make sense at all. Clause 79 deals with the notice to the inspector in respect of the actuary. Clause 80 deals with the protection for whistleblowers, whether whistleblowers are auditors, and Clause 81 pertains to matters of the Professional Association for Auditors and Actuaries. So these are the 3 clauses that pertains to actuaries. Mr. Vice President, this section of the bill is absent on the following. The role and function of the actuary is entirely missing from the bill. The independence of the actuary is also missing from the bill. The qualifications of the actuary in terms of the person's qualifications, the years of experience, the membership of which in the professional institutions, all of that is lacking in the bill as it pertains to the actuary. The access to information by the actuary, the obligation of the company to provide the information to the actuary is also absent. The reporting relationships, to whom is the actuary reporting? Whether it is the CEO, chairman, or board, that too is missing. The responsibilities of the actuary as determined by the inspector. The inspector has not, the requirements of the inspector has not been addressed. The term of office of an actuary, how often will the actuary be changed? Because rotation would be important. And the roles of the actuary with respect to the external auditor, whether or not the external auditor can utilize the function of the actuary, or in more proper with a more proper process, the external auditor can contract its own actuary in terms of verifying the data, because the internal actuary will compromise on the integrity of the data. With this section, in terms of the actuary, I find it a little bit missing or not well addressed, and we need to strengthen it in order to improve the management area of the bill. Mr. Vice President, also in section 79.5 of the bill as it pertains to the actuary, I found it to be a little bit overwhelming with it, and it really pertains to what happens when the actuary has to be changed. I'm going to read it. It's a little bit long from the bill, but I'd like to just make the point here. It says, where the appointed actuary of an insurer has resigned or the appointment of the actuary has been revoked, no person shall accept an appointment as an appointed actuary of that insurer until. So we're seeing here there's a restriction for the new actuary to come to occupy office. But the role of the actuary is very critical to the management of the company and providing information. And it's saying here that no one shall accept that position until the person has requested, the new actuary has requested and received from the appointed actuary who has resigned or who has revoked. So the new actuary has to wait on a finding or on a report from the former actuary as to the reasons as to why their contract has been revoked or terminated. Now, if an actuary wants to not be fair to the company that they were working for, they would just hold this, and therefore the new actuary can't really take office. And so, with respect to this clause, I'm just asking for no person shall accept an appointment as an appointed actuary of that insurer unless approved by the inspector, because the inspector would be aware of the conditions that would have existed for the actuary's position to either be terminated, revoked, or upon termination not be renewed. And given the problems with actuaries and auditors, I believe a clause needs to be inserted here with respect to actuaries, where their term of office comes to an end, or the revocation of their contract or revocation of their appointment comes to an end. Then a clause needs to be inserted that the working papers and all information as it pertains to the insurance companies must not be withheld. Must not be withheld by the actuary. It should be given up. And if it's withheld, then a fine or an appropriate penalty can be included. Mr. Vice President, moving on to the last section of my presentation, which pertains to section G of the bill, and it talks about prudential requirements, restrictions, and prohibitions. And I believe it begins with clause 82 of that bill. Essentially, this section speaks of guidelines by which insurance companies and their affiliates must abide. And I think this section is very important because many speakers who spoke before me spoke of the capital adequacy that must be maintained and must be held by the companies in order to ensure their ability to meet their obligations. Clause 82 refers to the capital adequacy and liquidity. Clause 83 refers to the adequate assets. Clause 84, restriction on payment of dividends. Clause 87 deals with acquisition of shares. Clause 89, limits on credit exposure. And I do believe that it's very important in this section that these requirements be fundamentally adhered to in order to promote financial soundness. Now, here's the question. Given that all of these pertain to capital adequacy, liquidity, adequate assets are very important benchmarks or statistics, then who's providing these statistics? Who's monitoring it in the company? Who's ensuring that the inspector has access to this information? And who's monitoring it on a per transaction basis, that each transaction that the company engages in, that the company remains in accordance with the law, and to ensure that its liability position does not exceed its capital provided. And it brings me to the point that in terms of managing the asset and liability base of the company, that a unit in the company, just like the audit committee, should be there to monitor the performance of asset and liabilities, so that that committee becomes the first flag if anything goes wrong, because that committee exists during the operations of the company. If that company doesn't exist, the first check and balance of capital adequacy going out of whack is with the inspector. And so the burden of managing the company now lies with the inspector. That should not be. The company should be held responsible and should have an opportunity to first recognize that something is going wrong. And therefore, I do recommend the institution of a new committee called the Asset Liability Management Company, which really manages the same risk here. It is just to say that the company now has a unit that is responsible for monitoring the assets and the performance of its assets and liabilities, and has now the obligation to report to the inspector. If something goes wrong, that committee is the first point of reference. And so I'm asking for consideration to be given to that committee. So the Asset Liability Committee, and the next committee that I would like to recommend is one of compliance. Why am I recommending a compliance committee? If I refer to the Bill Essentials, and according to Schedule 6, administrative fines, there are about 80 possible administrative fines for any offenses in this Act. There are at least 12 more to deal with agencies and brokerages. So that there are lots of penalties in here. There are lots of requirements that the auditors must meet. The internal audit committee, how it is to be constituted. The actuary, the obligations and responsibilities and functions. The external auditor, all the requirements they have to meet. Who's monitoring all of this? And while it is in the law, which is excellent, the management of this to ensure that the actual outcome that we desire is achieved is somewhat lacking. And so we need some person in the company, whether through a compliance officer or compliance committee, to continue to regulate the affairs of each company as it pertains to the requirements of the inspector. It cannot be, or it should not be, that we know what we're looking for, but we shift the burden to the inspector, and when he looks at it annually, he's doing a check and balance. By then, if something had to go wrong, it would have gone wrong and probably begin to run away. But that internal committee can be held accountable for notifying the board as soon as something goes wrong with respect to that. So I've really reflected on the two additional committees, the Asset Liquidity Management Committee, which really deals with the prudential requirements and prohibitions, and a Risk Compliance Committee, which deals with the company complying to all of the regulations. And so, Mr. Vice President, as I come down to my last point, as it pertains to financial statements here, and the subsection on financial statements, then and in Part 5 of the bill, it talks about clauses 144 and 145, talks about the preparation and submission of financial documents, statements, and returns. I do believe here that in clause 144, as it pertains to the submission of documents, and clause 145, both here, where the statements of liabilities and assets need to be submitted, I do believe that these shouldn't be just statements of assets. It should be audited statements. And therefore, the word audited needs to be included, because anyone can prepare financial statements. But in submission to the inspector, it should be audited statements. So I do ask for the consideration for statements to be audited, that are to be submitted. So it should read in clause 145A, audited statements of its assets and liabilities, audited statements of earnings and expenses, the report of the auditor, and any other information. The word audited would be critical here. However, there's a very important document that's missing here, and it's the cash flow statement. The cash flow statement is the first statement that will reveal some element of illiquidity, cash flow problems that will exist. And therefore, we also need to include here audited cash flow statements here. And if we are considering other documents, I do believe as well that the actuary's report should also be submitted, because that is commenting, or that person or that office is commenting on the portfolio of policies being held by the company. A compliance report and a report from the Asset Liquidity Management Committee, if those two committees are accepted. So, Mr. Vice President, those two are very critical with respect to the financial statements and returns to be submitted. So, Mr. Vice President, I know I've said a lot, and just to recap quickly, I've agreed that the bill has a lot of strength in it that promotes the financial soundness of the Trinidad and Tobago economy. However, I did ask for at least a minimum time or minimum period of it being annually be included in the clause referred to, I think it's clause 10, where the inspector will be able to at least analyze or look at each company's accounts at least annually. I've also recommended a compliance officer to be included in this bill so that there's a person to whom or with whom the inspector can directly relate and report. With respect to Clause 10.7, conducting its business in an unlawful or unsound manner, I did ask for the registrant to be informed in writing. And with respect to Clause 8, where there's the time gap between not adhering to the functions or the requirements of the inspector and going to court, that some additional measure be taken to protect the business during that period. Clause 11, with 10.11, with respect to the removal of documents, I've asked that it not be removed initially unless there's cooperation with the registrant, because 10.13 allows for removal when there's objection to it. With respect to corporate... Thank you, Mr. Vice President. With respect to corporate governance, I do believe that, and as I did say, the section in terms of the composition of the board, the number of directors, the minimum number, the executive and non-executive, the number, and the number of independent directors are missing with respect to the composition of the board. With respect to the auditors, I have proposed that you use the word external to differentiate the functions of internal and external. And the law does not allow for external auditors to utilize the services of an independent actuary in providing financial accounts or reports. Clause 78 that dealt with the appointment of an actuary, the law was missing on the role and function of an actuary, independence of an actuary, role of the external actuary in context of external auditors, the qualifications, membership, and experience of the actuary in performing the function. And with respect to Section G, I've asked for consideration for the Asset Liability Management Committee. I've asked for consideration for the Compliance Committee. And with respect to financial statements and returns, I've asked for the inclusion of the word audited, the inclusion of audited cash flow statements, and other reports such as that of the actuary and that of the auditor. Mr. Vice President, I thank you.
Senator Henry.
Thank you, Mr. Vice President, for allowing me to make a brief intervention here. Tonight, I think we have covered a lot of territory already. And as the Minister himself at the beginning of the debate pointed out, that this bill has been in gestation for a very, very long time. And as my colleague, Senator Mahabir, said, basically, well, he didn't say it this way, but he probably meant we should just get up and say, please support the bill, and let's vote on it and go home. Because this, as I see it, in our bringing this bill and so on, is the end of a very long process, and we are not, at least I am not inclined to come back and send this bill anywhere else beyond tonight. This is it. Okay? So, Senator Shriki, despite your passion plea, I have the feeling that you wouldn't get much traction in trying, because we may not want to play around with this for another 2 to 3 years. Okay? So, and because it has really been a beaten horse, it has been exhaustive. The Minister pointed out all of the different experts, all of the consultations that we did with ATIC, the Insurance Association, and numerous stakeholders. And I was involved, not in all of it, but quite quite a bit of it. And a lot of what was raised was, we had in-depth discussions over these issues. You know, it wasn't a fly-by-night thing. Both the opposition and the government made very, very critical inputs into what we have before us today. So it wasn't just a P&M thing. It was fully well supported by the UNC members of the committee as well. So given that this bill is an update on something that we did in 1980, we have insurance companies operating under 1980s legislation. I mean, that is a source of embarrassment. That should be a source of embarrassment for the country. That we should still be, that we haven't updated our legal infrastructure. Right? And so what is really the consequence of the bill that we have before us now in its final phase? Right? The first thing I just want to spend a few minutes on is looking at what really is the impact of the bill. Senator Rambarat made reference to some of it, but the most important thing is the modernization of our financial, legal infrastructure, right? That we aim and we like to claim we are the financial center of the Caribbean. We are the biggest financial markets. We have the biggest banks and so on within CARICOM. And we have quite a bit of outdated legislation. We struggled through this with the Securities and Exchange Act a few years ago under the UNC administration. It was a similar type of bill, just as big and unwieldy, but we got it done. And it wasn't perfect, just like this one probably is not perfect as well. But after a few months, some issues arose. They came back to Parliament, the UNC that was, and we made the adjustments, and the bill is in full operation now. Okay? So at worst, we might have a situation like that again. We may not have, we may not have gotten it perfectly right, but I think given what was put into this, it's very commendable. All right. Another issue in terms of the impact of this bill, what we are passing here tonight, hopefully, is that we bring in some discipline to a relatively unruly, what has been an unruly industry over the past few decades. Insurance companies have been able to do whatever they want in the market, with CLICO being the number one example of that. And you have a lot of other small insurance companies who were able to basically run riot in the place. And all of the complaints we are all familiar with about insurance companies tend to be associated with small companies that really don't have all of the infrastructure in terms of corporate governance and different corporate compliance committees and all these things that we are putting into the new bill. All right. Now, on that note, what we have, one of the main consequences of the bill that hasn't been mentioned yet is that this bill is most likely going to lead to some consolidation in the insurance market, in the insurance industry, because smaller companies may find it difficult to meet all of the requirements of the bill. The requirements in the bill are quite onerous for small companies, and if they don't get their act, well, they know it was coming now for many, many years. So hopefully, if they want to stay in business, they would have gotten their act together by now. But very likely, smaller companies, the more fly-by-night operations, will fall by the wayside. And that may be a good thing for our market, because to some extent, certain parts of our market, of our insurance market, was a bit overdone. And we had too many of these companies and too many complaints from the public about the kinds of services that they were getting from these companies. One of the key aspects of the bill is also the information sharing that the minister mentioned to help us deal with issues such as the CLICO CL Financial /CL Financial debacle, which involved cross-border issues where the CLICO had operations throughout the Caribbean and, well, other parts of the world, all over the world, in fact. And the whole CLICO be British-American debacle, where these countries in the Eastern Caribbean suffered a great loss because of the debacle with British-American insurance, mainly, not CLICO so much. And they have actually come to the Trinidad and Tobago government seeking a bailout from us for their problems caused because Trinidad was the base, the whole base of the CLICO conglomerate. And one of the things that happened that caused the success of CLICO in the islands, as well as the problems that ensued, is that those people in the islands bought into CLICO and British American products because they thought it was properly regulated in Trinidad and Tobago. They took it for granted that we had our house in order. So they figured this was a big, successful Trinidad company coming into St. Kitts, Antigua, or wherever, and offering products. It wasn't one of their own small fledgling companies. This was a big fish, a big established company that was bringing into their territory sound products. It's the same thing like if we saw big established American companies offering products here, which some people have gone for, right? And the suitcase traders, as we know them, come down and offer products by well-known companies in the US, and people go for it because they assume that these companies are well-regulated. Well, it's an American company. It must be well-regulated. So they just buy into it and it's a similar thing what happened with the smaller territories in the Caribbean when they saw this big established company from Trinidad and Tobago offering their products, right? And I've sat in discussions with people from the islands, and that's one of the things they pointed out in terms of why CLICO and British American became so successful in their territories. Now, like I said, I'm only making a few comments, but I can't leave without touching on two topics two of my pet peeves. The CLICO issue, which I sat on that side for 5 years, and I was the main spokesman for issues related to CLICO. I could talk about that alone for the whole presentation. CLICO at one time was allowed to become too big to fail. And that is something, hopefully this legislation, because of its many safeguards and so on that we built into this, won't allow that to happen again. Okay? At the high point of CLICO, back in the mid-2000s, right? One company had 75% of all the long-term insurance premium business. 75%. When you look at the table and you saw CLICO share of the long-term insurance business, and the next company down like 10%, 15 or something, So it was startling that people could see that and not wonder what was wrong. How could one company, as opposed to all these other existing companies, because we have quite a bit of insurance companies in the country, but this one company was able to corner 75% of the market, not 50, 75% at the peak. Right? And someone mentioned the issue of somebody saying that saying something bad about CLICO in the 90s. And that, in my recollection, was the former Attorney General Lawrence Mirage, who basically came out and said that CLICO was insolvent. And he was made to humble himself and backtrack because, as we all know, of the political influence that some members of the CLICO leadership had at that time. But what was interesting that many people don't or may not know is that after that event, the business of CLICO went through the ceiling. CLICO Investment Bank, all the flexible annuities and all the stuff that created all the mess that the last two governments had to deal with, really took off. So after talk of insolvency of the company, the deposits, for example, in CLICO Investment Bank went up from about 1 billion to about 6 billion. So when people thought, sometimes you say bad news, supposed to mash up the company, it was the opposite. People rushed to put money in there after. Right? And it's not unusual in financial markets for that to happen. But it did happen, and many people were not aware of it. That despite all the talk of all the problems, and around the same time, when the former Attorney General made that statement, there was an issue of CLICO trying to take control of Republic Bank. And Republic Bank fought back, and they put out a document outlining why CLICO was not a fit and proper to control Republic Bank. I still have the document. I was reading it recently. Makes interesting reading, some of the names, because people tend to forget who the players are, who the players were. Some of them are still around today. Right? It was a very belligerent document put out by Republic Bank against CLICO. Yes. And if you could get it, it makes very interesting reading in retrospect now, after you see what came and happened later on. But Republic Bank was warning the country that CLICO was not a fit and proper entity to own a bank in this country. Okay? And we saw what ended up happening. And like I said, I could talk for a very long time about just this one topic alone. But hopefully this bill, like I said, will not allow something like that to happen again. And that's why it's fundamentally important that we do pass it as soon as possible. It was up to me. We passed this last week before last year, not now. No delay. And one last topic before I close off. Several speakers mentioned the international financial crisis, and some seem to indicate that it may have had something to do with the CLICO debacle, and some say, well, maybe not. Well, yes, it did. Right? Part of the problem, of course, was the way the financial crisis affected us in Trinidad and Tobago was through the fall in commodity prices. It was an indirect effect. CLICO was affected by the fall in methanol prices. So that ate away at a lot of their cash flow because they depended on the money they made from methanol, which was in US dollars, which they would bring back into Trinidad and exchange. It was one of the methanol plant was one of the major sources of foreign exchange for the country. Right? So when it was sold under the last government, it eroded a major source of foreign exchange for us. We got some foreign exchange in terms of the one-off payment for the shares, but the flow, the CLICO methanol plant used to bring in on average about 200 million US per year, when methanol was, of course, doing well, and methanol had rebounded. So it was a significant source of outside of the traditional energy companies, like what we get from BP and all the others. So we lost one source of foreign exchange flow when we had to sell the company back to sell the shares to the Germans. And also, the CL Financial was affected by the drop in the Florida real estate market. That was another dimension that caused the company problems, that many people may not think of, because they had invested a lot of money into Florida real estate. And that went south with the financial crisis in 2007, 2008, and put them in great difficulty. So that was the two main channels in which the crisis hit. I mean, I could go on and on about what happened with all the purchases and the bad management practices and so on at the top of the company. But in terms of the bailout and the financial crisis, several people mentioned AIG. And the biggest bailout, I think somebody referred to it as the biggest bailout, single bailout. Now, AIG, just to add a little bit to that, AIG was bailed out in order to pay off Goldman Sachs. It wasn't to save AIG. It was to save Goldman Sachs. Right? Yes, the money that was paid to AIG was money that they were owing to Goldman Sachs. And go find out who was treasurer of the what do you call them? yeah, Secretary of the Treasury in the U.S. Go find out who it was, and you get your answer as to why that happened. You know. So AIG was an insurance company of ostensibly insurance, but just like LICO went into dabbling into all kinds of things that had nothing to do with insurance. Right? And they found themselves in trouble. And when we talk about bailout in the U.S. and bailout here, I like people to understand that it's two separate things. The Americans bailed out their corporations. Trinidad and Tobago government bailed out the people who had the depositors. It's two separate things. So when they use the word bailout here and the bailout there, it's two separate things, right? The Americans practice a kind of socialism for the rich, where they bailed out the top echelon of their society. They refuse to implement programs to bail out all the people who lost their houses and so on. With the genesis of the financial crisis, the debt equity swaps and all that came after. The real genesis of the financial crisis was in the housing bubble, where people were buying houses with no money down and so on. Ninja. There was what you call ninja loans. Ninja means no income, no assets. Right? And people would the bank would just say, yeah, go take the house, we'll give you a mortgage. They didn't have to put on anything. Based on that was based on the fact that the price of the house would increase. And later on, 6 months later, you could sell it to someone else. And that cycle would just keep going until, of course, everything comes crashing down. It's a classical Ponzi scheme, basically, yeah. And eventually it crashed, and all these derivatives, CDOs, SUVs, and whatever, they had all kind of fancy names to confuse people, but it was basically rubbish, right? A lot of junk bonds and worthless pieces of paper were traded over and over again. But everybody made money for about 6 or 7 years until the fun stopped. One last point. The funny thing is, the American government has never really dealt with the fundamental issues of the financial crisis, 2007, 2008. So it's just a matter of time before it happens again. So with these few words, I commend everybody to support this bill. I think a lot of hard work from a lot of very good people went into it. And I was involved in it when the other side was in government, and I was involved in it under this current government, and I'm happy to say that this government is passing this bill. Thank you, Madam President.
Senator Subas.
Thank you, Madam President, for allowing me to take part in this contribution, this discussion on an act to repeal and replace the Insurance Act, Chapter 8401, to reform the law relating to insurance companies, to regulate insurance businesses and privately administered pension fund plans, and for other related purposes. Madam President, permit me from the onset, because I don't think I heard any other speaker do so in their contributions, but I personally would really want to congratulate the Parliament as a whole, please, Madam President, because the product that we have before us today is really the work of successive administrations on both sides of the House coming together to produce something that is extremely palatable, that should redound to the benefit of the Republic of Trinidad and Tobago and the people contained therein. And it definitely demonstrates, Madam President, what can be achieved when both sides of the divide really put their minds together. 2 heads are better than 1, and 3 heads are better than 2, and so on and so on. But equally, Madam President, it demonstrates, at least on the part of the opposition, please, a willingness for us to support good legislation brought on by the government. That we are oftentimes accused of solely opposing for opposing's sake. But I think in terms of the passage, or the hopeful passage of this legislation, we can definitely demonstrate that we would lend our support to the government once they bring to this Honorable House good legislation. Madam President, this particular piece of legislation has come about after what can only be described as the worst financial atrocity to strike the Caribbean, and in particular Trinidad and Tobago, its epicenter being found in Trinidad and Tobago. And I listened earnestly to the past speakers in terms of their contributions, and it was only recently, if I'm not mistaken and subject to correction, during the contribution by the Honorable Senator Dr. Lester Henry, that he mentioned the word Ponzi scheme. And to be honest, Madam President, when one boils this entire situation down and extracts all the fanciful terms and terminologies that may be associated with it, the debacle of the CL Financial Group was at its heart really and truly just a Ponzi scheme. And for the benefit of the listening public, please, Madam Speaker, and the viewing public, Madam President, I do apologize. A Ponzi scheme is a fraudulent investing scam promising high rates of return with little risk to investors. The Ponzi scheme generates returns for older investors by acquiring new investors. This is similar to a pyramid scheme in that both are based on using new investors' funds to pay the early backers. For both Ponzi schemes and pyramid schemes, eventually, there isn't enough money to go around, and the scheme unravels. And Ponzi schemes really originated back in 1919 under a gentleman named Charles Ponzi. And what Mr. Ponzi was involved with, or in rather, he was involved in the sale of postage stamps. And that particular venture eventually mushroomed, and he began to take investments from persons. The initial business model in terms of the exchange of the postage stamps was what was known as an arbitrage at the point in time, and that in itself was not an illegal practice. But Mr. Ponzi, just like many others who have come after him, and for the few that came before him, became very greedy and expanded his efforts. And under the heading of his company, Securities Exchange Company, he promised returns of 50% in 45 days, or 100% in 90 days. And due to his success in the postage stamp scheme, investors were immediately attracted. And instead of actually investing the money, Ponzi just redistributed it and told the investors they made a profit. The scheme lasted until 1920, when an investigation into the Security Exchange Company was conducted. And I made mention of the fact that such activities, atrocious activities, fraudulent activities, actually took place before Charles Ponzi in 1919. Ponzi schemes have actually been demonstrated to go as far back as the 1860s, please, Madam President. And if one does some level of research, one would recognize that since the 1860s to now, you would have thousands of persons being engaged in Ponzi schemes. The majority of them actually are currently, some of them who are still alive are currently incarcerated, and the majority of them would have been tried and found guilty and convicted accordingly. But, Madam President, the difficulty is that we must appreciate what the purpose of our activities and our toils to get us this far has come from. The seeds that were sown, please, Madam President. That I think what should be placed upon the record, and I think for the better part of his contribution, or for a significant part of his contribution in the last occasion, Senator Small made reference to the fact that many a times the persons who face the courts are just simply the blue-collar criminals, and that white-collar criminals often evade the reaches of the courts. And I want the listening public and the viewing public to appreciate that we here in this Parliament understand that you need not really rob a bank, as they say, with a gun, or commit an offense against some financial institution with some form of weapon. Some of the worst financial crimes, Madam President, are committed by persons who just have cunning and guile, and as we like to say, people who have sugar tongue, so that they can talk and swindle you out of your earnings, and that they're the ones who, unfortunately, it is perceived in this country, avoid the hangman's noose. But this particular piece of legislation, it is hoped would prevent such situations from happening. I know that maybe in terms of wrapping up, it may be placed upon the record, and I can so do now, that this particular piece of legislation will not be considered, as the Honorable Attorney General likes to say, it's not a single magic bullet. It's not a panacea or a fix-it-all situation. But it is a good step in the right direction to so do, to hopefully prevent the reoccurrence of the Clico debacle from happening again in this country, and to dissuade and discourage persons who would want to prey with the use of their sugar tongue on the most vulnerable in society, who are looking for that extra way to make money, or who are looking for that extra way to save the monies that they would have made during their time of life. And, Madam President, we are not novel in terms of what took place, as I mentioned, that the roots of the Clico debacle really took place in what is commonly known as a Ponzi scheme. But all over the world, please, Madam President, you have persons engaging in these activities. I think the difference that persons may take note of is the fact that some of these individuals in foreign jurisdictions are currently incarcerated, whilst others who would have committed those atrocities upon the people of Trinidad and Tobago, as Senator Small likes to say, they're living large and continue spending in all sorts of exquisite and exclusive places around the world. And it brings to mind, most recently, two persons who were engaged in Ponzi schemes in the U.S. Most notably, or notoriously noted, was that of Bernie Madoff, who it was alleged took part in one of the biggest Ponzi schemes in the world, in the history of the world. And he's currently serving 150 years behind bars. And he had to forfeit almost $18 billion in U.S. currency. Another more common name within the Caribbean region is that of Alan Stanford. He as well is currently serving a term of 110 years in a Florida prison, and he had to forfeit almost $10 billion. But I know that persons within the public domain may ask, but what of the perpetrators behind the Clico fiasco and the HCU fiasco? Why aren't they serving terms in prisons and having, or were made to force to pay back to the people of this country billions of dollars that they may have inappropriately availed themselves of. And the thing is, Madam President, I listened to the contributions made in the other place when this particular piece of legislation or the committee's report was laid there. And I understand, also being a legal practitioner, that matters such as these take a very long time to sort out. That fraudulent and high fraudulent matters such as these require a certain level of expertise. And hence I think the reason that the Commission of Inquiry into the matter was launched, and also the reason why, in terms of the budget that the midterm review that just passed this Honorable House, extra funding was required for the DPP's office to finish some of the work started into this investigation, into the Clico fiasco. And Madam President, whilst I'm on my legs making reference to that particular situation, there will always be vulnerable persons in society. There will always be persons who would dream and wish and hope and pray of a better and brighter sun. Up to recently, please, Madam President, there would have been an individual who visited my office, a teacher, an educator, no less. And she unfortunately would have been, she came for some legal assistance because she received several correspondences from one of those African nations informing her that she had a relative, some distant relative that she'd never heard of, that passed away, and that she was required to send funds across to them for them to probate this dead man's estate that was worth hundreds of millions of US currency. And she came to my office inquiring. At this stage, she recognized that this may have been some fraudulent activity that she was a victim of. And she wanted to know whether or not there was anything I could have done for her. And the first thing that I had to ask of her, did you have a relative who lived in this African nation that you didn't know of? Right? And to be honest, that was the response. She was not entirely certain. So in an effort to find out whether or not it was true, she sent the money across to these people, and it was actually her entire life savings. Her entire life savings. And so that there will always be vulnerable members of our society. And as much as we would want to try to protect so many different persons, we may not be able to so do, but we will try our very best, as a responsible parliament should and ought to. Madam President, I also want to put into a bit of context the level of financial atrocity that the CL Financial Group placed this country in. The level of...
Senator Sobers, yes, you've now been speaking for quite some time, and a lot of what has gone before has dealt with the Clico situation, and you're starting to repeat some of what I've heard from the speakers before. So I need you to veer away from that sort of repetition and, deal with some other aspects of the matter at hand.
I was just attempting to demonstrate the level of misappropriation and unfounded diligence conducted by persons running the organization that placed this country in that precarious position to bail them out. So that, in terms of my introduction into the bill, please, Madam President, allow me to read from an article in the Trinidad and Tobago Guardian, dated the 23rd of June 2016. It's entitled, Coleman Report Knocks Central Bank in Clico HCU Fiasco. Regulatory control seriously lacking. And it was from the Coleman report that particularly influenced the work that was done by the Joint Select Committee to get this bill to the stage it is at currently. It starts, the deficiency in the central bank's regulatory control of the insurance industry and the respective visions of CL Financial Chairman Lawrence Dupree and Hindu Credit Union Chairman Harry Narayan have come in for criticism by Chairman of the CLICO/HCU Commission of Inquiry, Sir Anthony Coleman. Coleman, sole commissioner of the inquiry, delivered the remarks in a statement reflecting on his final report of the 5-year task of the inquiry. In his statement, in yesterday's statement, read by Gonzalez, Coleman referred to the captains of CLICO and HCU in seeking to identify the one characteristic which linked the collapse of HCU with that of CLICO and its associated companies. Coleman said it was repeatedly claimed that the one motive that drove both Harry Harrinarayan and Lawrence Dupree to ever bigger deals was vision. Yet in spite of all the warnings received from the central bank and the auditors, they went on like Icarus, only to be destroyed by the sun of their own vision. He said it was not the appropriate time to comment on the report's findings with regard to the responsibility of the CL Group collapse or on a mechanism of failure which caused the government to intervene in such large measure. However, he said there were two matters which needed immediate legislative action, which I believe is what we are doing here as a responsible parliament. Firstly, the powers of the regulatory control of the insurance industry by the central bank are found to be fundamentally deficient, which I believe this bill has addressed. That deficiency was starkly shown up by the autocratic style of management of CLICO and the CLF Group, generated by its business model, which is found to be seriously flawed, and by the cavalier manner in which it treated attempts by the inspector of financial institutions to deploy such limited regulatory control tools as were then available and ignored to a large extent. But, Madam President, basically, Mr. Coleman went on to say other things which supported the move of this House to bring about this bill. Madam President, the bill of itself is quite, in my opinion, very broad and very comprehensive. It can be split up, in my opinion, in terms of enhanced corporate governance, prudential requirements. With respect to enhanced corporate governance, it can be found in clause 47 to 48 and clauses 66 to 80 and beyond. Prudential requirements can be found with respect to clause 82 and clause 143, and the protection of policy holders and members of the public at large within clause 82 as well. There are also measures with respect to strict penalties, Madam President, and also whistleblowing protection, please. Madam President, when one looks at the bill in particular, and I won't spend much time because I appreciate that much has already been said on the bill, Madam President. Madam President, the bill is quite comprehensive. It has covered, in my opinion, many aspects of protection for the policyholders and members of the public at large. I know that, in particular, what I wanted to touch on, which wasn't really raised before, is in particular clause 66, dealing with corporate governance. That clause 66 provides for a director of an insurance or of a financial holding company not to be present or vote at a meeting or a committee of the board of directors when a contract which would result in financial benefit to him other than a contract of employment is being considered. And Madam President, that particular clause reminds me of a particular case that went to the Court of Appeal in this country. And that case, Madam President, is HCC number CV 2011 of 022140 between Louis Andre Montai, Stone Street Capital Limited, Appellants, and Central Bank of Trinidad and Tobago Colonial Life Insurance Company Limited. And Madam President, basically what that case dealt with was situations wherein persons who may have been part of particular institutions using their influence on these institutions to gain some financial benefit. And that particular clause, Madam President, prohibits individuals from being able to vote to influence certain decisions wherein some type of financial benefit would redound to them. Madam President, I was also very pleased to see, in terms of corporate governance, that there are controls now in place to have auditors being appointed to assist in terms of the runnings of these organizations for larger companies, actual scientists also being involved. I was very happy to see that there's a clause for separate accounting so that there's no commingling of funds, and that could be found at clause 42, Madam President. Because commingling is a very significant problem that took place in terms of the Clico debacle, that there are also, Madam President, clause 69 deals with a level of collective responsibility in terms of decisions that are made. I was very happy to see that in the bill. I was also very happy to see, in terms of the information systems for credit exposures, at clause 71 and clause 72, the level of scientific and empirical data being used to influence and monitor some of the credit systems in these institutions. And I was also extremely happy, Madam President, to see that there was now some level of a litmus test in terms of valuating assets and liabilities for these companies, which could have been found, Madam President, in clause 143. So that, and I was also very happy to see clause 82 with respect to capital adequacy, which brings most of these financial institutions up to date in terms of what their capital adequacy should be. And also very, very happy to see a clause to deal with the protection for whistleblowers and persons of that nature. Madam President, I also had a bit of an issue initially when I was looking at the bill with respect to some of the sanctions laid out in Schedule 6, but having listened to the contribution made by the Honorable Attorney General in the other place, I appreciated what influenced the decision-making process there with respect to advice being sought from Ed Fitzgerald of Queen's Counsel. So I was happy to see, I was able to understand the schedule in its entirety. Madam President, 2 points I would just want to touch on before I take my seat. The first is that my only concern with the legislation is in terms of its effectiveness now redounding to the citizenry. I hope in terms of the wrap-up from the Honorable Minister in the Ministry of Finance, we can hear something about what infrastructural mechanisms would have been put in place in anticipation of this bill becoming law with respect to the central bank itself. And also, Madam President, I would want to put on the record in furtherance of my support for this particular piece of legislation that it really catches all manners of persons, as they like to say in Trinidad adage, from chief cook to bottle washer, because there's even a penalty, Madam President, for what can be considered false advertising in Schedule 6 at 258.2, failure of a registrant to correct or withdraw a misleading or objectionable advertisement. So, Madam President, I for one particularly, I'm very supportive of this particular piece of legislation. It may have very well been overdue for some time, as the old legislation has been on the books for 40 years. And I do agree that we should act with haste with respect to treating with this matter. I thank you.
Senator Duke.
Madam President, I thank you for the privilege of contributing in this debate on the bill, an act to repeal and replace the Insurance Act, Chapter 8401, to reform the law relating to insurance companies, to regulate insurance businesses and privately administered pension funds plans, and for other related purposes. My interaction with this bill, Madam President, is recent. And I had many questions and tried to form many linkages in the material presented. Fortunately, having sat here from 1:30, I have recognized that this bill was in formation way back as far as 2011, and that many of the honorable ministers and senators have contributed in a lot of ways to the production of this bill. And therefore, I would have looked at it And I feel that I must compliment the framers, who are all the honorable ministers and senators and the other people in the Joint Select Committee. Because when you look at what was done, it is very comprehensive. At this point in time, you look at the safeguards that are in place. From Clause 5 talks about connected parties, so that it brings everybody into focus, so we begin to understand how some of the wrongdoings were perpetuated. Things like separated accounts, financial condition reports. My presentation is going to be curtailed because most of it has been said. But I felt that I need to make a contribution so that all that has been done, and to give support to what has been said. One thing that I'm a little bit still concerned about is the whole question of whistleblower. A whistleblower. I know that the bill says that it can be taken to the central bank. Let me just find that here. That communication to be given to the central bank in good faith and in a professional capacity. The question I ask is, what if the whistleblower doesn't want to be identified? Do we have the safeguards in place? The small man, in my view, is who must be protected. When you look at what has happened and what was the genesis of much of this bill, the small man has been the one who has suffered greatly. What is this? What are we going to do about ensuring that these wrongs do not persist? And I would have listened to Senator Mahabir and some other senators who would have indicated what needs to be done. I compliment that. The bill, to my mind, has treated comprehensively with all that has been said. The ordinary man, Madam President, must be protected. The themes that have been brought out as to, like, non-disclosure, right, the explanations and definitions allow me to follow what was happening in the main document. Madam President, as I look to the rest of this bill, the bill being passed this afternoon, I feel that justice would have been done to this bill. And I take the opportunity to lend it my support. Thank you very much.
Honourable Senators, permit me to congratulate Senator Duke on his maiden contribution. Minister in the Ministry of Finance.
Thank you, Madam President, for giving me the opportunity to wrap up this debate, which was mercifully shorter than I had previously anticipated. In the best way possible. Madam President, as we are all aware, the insurance industry is a peculiar one, in that, especially long-term insurance, in that it is the only business where you purchase an asset now without expecting a benefit from that purchase for years and even decades to come. But the possibility exists that you may reap the reward tomorrow. So it creates difficulties for the person selling this product to determine how to price the product, what kind of return to give, and that kind of thing. They have to sit 20 to 40 years in front of when they have to pay out to determine what to invest in, what is the right combination of long-term assets and short-term assets, how much risk should they put in those assets so that they are in a position to both settle their current liabilities and settle their long-term liabilities as and when they arise, as well as provide a return to their investors. So that is not an easy thing to do. And into that space, we get the actuary, this mythical creature who is responsible for advising insurance companies on how to price their product, how to invest, what to invest in. And although I'm sure we all know actuaries, I don't know that any of us truly understand exactly what they do. And it does not help that this is an inexact science where different actuaries, depending on where they're trained and when they were trained, apply different methods. So that one aspect of the bill that I was particularly interested in and happy to see was that element that requires all actuaries providing services to Trinidad companies operating in Trinidad and Tobago to use the same method of valuation of liabilities. That allows for certainty. It allows for better review. It allows us to provide and collate statistics that will determine whether the pricing of products is reasonable, whether the returns on products is reasonable. It also facilitates greater mobility of insurance policies, because one of the things that we need to recognize as we move into this new world is that people no longer join an organization with the intention of serving that organization for life. So that whereas in my day you would expect this person that you started working with at 20 or 25 to provide you with a pension 40 years later, that is no longer happening. So portability of insurance products is more and more important. And with a common method of computing liability, portability becomes easier. So in my view, one of the most critical aspects of this legislation is the requirement to use a uniform method of computation of the liability. It also, in my view, allows the regulator a better chance of properly regulating an industry where he knows what the actuary is doing and how the actuary is doing it. So I really commend that section. Madam President, essentially, in an insurance company, you're dealing with three stakeholders. You're dealing with management and staff, and in the insurance context, you have a huge pool of insurance salespersons who play a key role in keeping that sector going, who are looking for a decent reward for the work they do. You have the customer/policyholder who is looking for certainty of his product. So he wants to know that in 10 years' time and for 40 years' time, he will get a return and a decent return. And you have the shareholder who is putting in his investment and, of course, wants a reasonable return. So the key aspect of insurance legislation is to ensure that each of these entities is protected and none of the entities, most especially the policyholder, who is the one most at risk, is not taken advantage of. And the legislation seeks to do this in various ways. It has put in rules regarding proper governance. It has put in rules regarding how insurance companies operating within a group must be structured. It has put in rules regarding how much of your capital you can invest in any one entity. It has put in rules as to how you are allowed to relate with related parties, how you are allowed to transact business with related parties. It has put in limitations on how much credit you can place into any one company. All of these rules did not previously exist in any robust manner or at all in the previous legislation, and should lend a lot of credence to the product that is before you, and should lend a lot of comfort to people seeking to invest in insurance companies now, following the collapse of the last company in 2010, which would have caused a loss of confidence in the industry. Now, it is essential that people have confidence in our financial institutions in general, and in insurance companies in particular. And the reason for that is that our work lifespan, it only takes us so far. When we get to the end of that work life, we continue to live. And as most of you know, our population is aging, which means we're living longer. So we have to live off of the fruits of the labor that we would have earned during that working life. While some of us are good enough to create businesses that will continue to provide us with that livelihood after retirement, or to save money, sufficient money to take us there, most of us rely on our interactions with insurance companies or investments in those companies to provide us with the livelihood post-retirement. And that is why it is important for us, one, to have confidence in those insurance companies, to be able to rely on those insurance companies. It is also important for us to ensure as a society that those insurance companies, that those insurance companies thrive and continue to survive and don't collapse. Because if we do not rely on the insurance companies and we fail to save for retirement, what does that do? It puts a strain on the state, because the state then has to take care of us. And let me give you some statistics regarding the obligation that we have placed on the state. At the moment, as of March 2018, there were 94,000 302 senior citizens in receipt of senior citizens' pension. That represents approximately 8% of the entire population, which is frightening in itself. But more frightening is it represents 78% of our over 65 population, which is estimated at 120,000 people. So imagine that in a country that has been replete with wealth for the last, 3 decades, 4 decades, we have 70% of our over 65 people relying on the state for their livelihood. Yes, so let me get to what that costs the state. The monthly cost of providing that support to our aging population is $299,993,000, or a staggering annual cost of $3.5 billion, which is 7% of the current national budget. So when you bear in mind that we have an aging population, and therefore the percentage is likely to increase, the percentage of our senior citizens is likely to increase vis-a-vis the percentage of our working population, you will see that this is an unsustainable model. With a small increase in the numbers, we could soon reach a situation where 10% of our population is relying on the state for their pension, which would increase the liability without an increase in the amount of pension paid to any individual. It will increase the liability to $5 billion a year. So this clearly establishes why it is important for us to get this right, so that people people regain their confidence and grow in confidence in the insurance sector, and we get the insurance sector operating in a way that will encourage more and more people to get involved in long-term products so that they can themselves fund their retirement, because the state will not be able to do it, not at these kinds of prices. When we think of senior citizens relying on the state for pension, we tend to think of people who during their working life were either unemployed or underemployed. A group of people we tend to forget are people who were self-employed, many of them doing very well during their working life, but not saving for retirement. I know of insurance agents who made millions of dollars during their life, who at the end of it did not have a means to support themselves. And they are not alone. There are lots of people like that. So that we have to get the nation into the mindset that they will, regardless of where they are in terms of their work life, that they will set aside funds in a responsible manner to finance their retirement. And this, hopefully, will be significantly supported by the terms of this legislation. Yes. Okay, so Madam President, essentially that's what I wanted to say on a global scale. I will just look now at specific issues raised during the course of the debate. The first was by Senator Mark, who asked about the draft regulations that are housed at the Board of Inland Revenue. Senator Mark, there are two authorities engaged in reviewing pension plans. Two separate regimes. The central bank is responsible for ensuring that the plan complies with the legislation and provides enough protection for the policyholder. Correct. The Board of Inland Revenue is responsible for determining whether the provisions of the plan are consistent with the tax legislation to allow for the tax relief that's available under the legislation. So it's not a case of moving the regulation from one to the other. Under the current law. Now, I accept that there is a need to do a review of the pension profile in Trinidad and determine what the limit on benefits is and those kinds of things. I remember just recently, maybe earlier this week, the head of the Amalgamated Workers Union raised a very important issue as to whether we should do a shift back from defined benefit plans to defined contribution, sorry, the other way around, a shift back from defined contribution plans to defined benefit plans. And that is a debate that should be held at a national level, because you have, on the one hand, under defined benefit plan, the employee has a guarantee of what his pension will be. But then the employer has no way to control his costs in respect of the insurance. So he bears the risk of an unsuccessful investment strategy for which he is not responsible. On the other hand, with the defined contribution plan, the employee is the one who bears the risk for an unsuccessful investment strategy. So a discussion needs to be had on a nationwide basis as to what we do with pension plans. But I don't think it is something that needs to hold back where we are. It is a separate issue that we need to deal with, but in my view, what we have included in the legislation with respect to pension plans is adequate, because while pension plans are not peculiar to insurance companies, they do operate and manage a significant portion of the pension plan activity. So I think it is important to have the reference to pension plans, but we need to develop and grow that. And yes, it keeps the existing law. So you had mentioned that CBT, the central bank, is now being given responsibility for various activities, and that may be an overburden. I will just say to you that the central bank is at this point in time, under the old law, already responsible for all of the areas that you identified, for pensions, for insurance, for banks, and they have been managing. The legislation is requiring them to do more, and they will have to beef up. As you know, the Ministry of Finance does not get directly involved in central bank activities, so I cannot tell you how they have beefed up their staff, but they have been integrally involved in this process. They know what is expected of them, and we would expect, like the responsible bank that they are, that they would be acting appropriately to get us there. And there is a proclamation clause so that if they need further time to get there, then we can provide them with some time, but not too much, because as we all agree, this legislation is important and we need to get it in as soon as possible. You also mentioned, Senator Mark, that only government employees do not contribute to their pension. That is not accurate. There are several employers in Trinidad and Tobago who have non-contributory pension fund plans. And again, that should be part of the wider discussion as to how we structure pension fund plans going forward. The issue of derivatives was mentioned by a few people, and I will just like to say that yes, derivatives are something that one needs to be aware of. They are derivatives that have worked well, that are very secure investments, that have produced good, solid returns, and they are derivatives that were in effect junk bonds. What this legislation does is it gives central bank, as a regulator, the authority to value the investments in any fund that an insurance company operates. And if central bank is of the view that the derivative or any other investment is unsound, then it can value that at a very low rate and require the insurance company, therefore, to increase the pool of assets in the fund to ensure that their liabilities are adequately covered.
That's why we stress testing this also.
Right, so we're stress testing and risk basing. The legislation allows for that. And I think given that power in central bank, that we don't need to concern ourselves too much with the fact that there's no specific reference in the legislation to derivatives.
So annual as opposed to 3 years.
And it's the review by the central bank is required to be done annually rather than every 3 years. So I think we have sufficient protection, and because of that, I am not concerned about the existence of derivatives. My recollection during the financial meltdown in the US was that although we were impacted, as Dr. Henry said, by the fact that there was an impact on commodity prices, there was no significant direct impact of that on our financial sector. And this is because the central bank played a very key role in alerting the financial sector to the fact that this thing would not last long, and it was in fact a junk bond. So I think we handled that well, and I think we can trust our central bank, once they're properly peopled and managed, to manage the insurance sector going forward.
And we have auditors, accountants, directors, fiduciaries.
It is also key that the legislation protects service providers to the insurance companies, like the actuaries and the accountants, from disclosing, from any accusations or actions against them for breach of their confidentiality arrangement with their employer, with their client. If they have to provide central bank as a regulator with information on any unsavory action that is conducted. So that gives a layer of protection that was not previously there. Prior, under the current legislation, if an actuary or an accountant or an auditor discloses information to the central bank, he could successfully be sued by his client for breaching that client-customer confidentiality arrangement. The law now provides that protection. So it gives us an additional layer of protection. So overall, it seems to me that the individuals involved in drafting and crafting and tidying up this legislation really did a very good job. Senator Shirky-Soon, I acknowledge that there's room for improvement. We will certainly take a note of your recommendations, and as we review the legislation over time, we can work on it. But I think it is an excellent starting point. I highly recommend it to you, and I hope that we can pass it this afternoon and introduce it in the near future so we can start heightening the level of protection provided to our policyholders and other people who do business with the insurance companies. With that, Madam President, I thank you and I beg to move.
The question is that a bill entitled An Act to Repeal and Replace the Insurance Act, Chapter 84(1), to reform the law relating to insurance companies, to regulate insurance businesses and privately administered pension fund plans, and for other related purposes, be now read a second time. Those in favor say aye. Aye. Those against say no. I think the ayes have it.
A bill entitled An Act to Repeal and Replace the Insurance Act, Chapter 84(1), to reform the law relating to insurance companies, to regulate insurance businesses and privately administered pension fund plans, and for other related purposes.
Minister in the Ministry of Finance.
Madam President, in accordance with Standing Order 66-1, I beg to move that a bill entitled An Act to Repeal and Replace the Insurance Act, Chapter 84(1), to reform the law relating to insurance companies, to regulate insurance businesses and privately administered pension fund plans, and for other related purposes, be committed to a committee of the whole Senate forthwith to be considered clause by clause.
Honourable Senators, the question is that a bill entitled An Act to Repeal and Replace the Insurance Act, Chapter 84(1), to reform the law relating to insurance companies, to regulate insurance businesses and privately administered pension fund plans, and for other related purposes, be committed to a committee of the whole Senate forthwith to be considered clause by clause. Those in favor say aye. Aye. Those against say no. The ayes have it. The Senate shall now go into committee of the whole to consider the bill clause by clause. You all may sit. Yeah. Honourable Senators, may I remind you that this bill has 282 clauses in 13 parts, 12 schedules, and there's also a preamble. I intend to go through parts. Okay, Honourable Senators?
Clauses 1 to 3.
The question is, the clauses 1 to 3 stand part of the bill.
Madam Chair, sorry to disturb your flow. May I just inquire, just for useful purpose, whether there are specific clauses that members propose? Are you?
As we go through, I will stop and I will take note of it. But let's do it this way, Attorney General, and sure. we will proceed. The question is that clauses 1 to 3 now stand part of the bill. Those in favour say aye. Aye. Those against say no. Clauses 1 to 3 now stand part of the bill.
Part 1, clauses 4 to 6.
The question is that clauses 4 to 6 stand part of the bill. Senator Ramkisoon.
Thank you, Madam Chair. It's a very simple thing, and I do know that the Law Commission handles spelling errors, but I just wanted to just capture it before we miss it, because I did see some amendments in some bills before us where we did amend spelling errors.
You can just go to it.
So
yes.
It's in actuary, and it says it needs to be actuarial accreditation body, not accreditation. I don't know what that word is, but it's supposed to be actuarial accreditation body.
Madam Chair.
You see that in page 3?
It's in the second line, the misspelling
yes.
of accreditation.
Yes.
And it's the CPC's proofreading that picks that up. Law Commission catches it on a different end, Law Revision Commission.
Right, so can we just catch that?
Yes, please.
Please, thank you.
But there's no technical need to amend it here, but thanks for observing it. The proofreading will take care of that.
So, Honourable Senators, the question is that clauses 4 to 6 now stand part of the bill. Those in favour say aye.
Aye.
Those against say no. The ayes have it. Clauses 4 to 6 now stand part of the bill.
Part 2, clauses 7 to 18.
The question is that clauses 7 to 18 stand part of the bill. Senator Mark?
Yes, Madam Chair, I wanted to, when you go to clause 8 in part 2, I would like another layer of accountability for the consideration of the Attorney General. Under clause 8, part 2, the report goes to the minister. But having gone to the minister, what is the role of the Parliament? The Parliament has no role whatsoever. We must have an oversight role of the operations of the central bank. We are giving this bank a lot of power, and they have a lot of responsibilities, and somebody must hold that bank to account.
Okay.
And I believe, Madam Chair?
Yes, Senator Mark, I think the Attorney General has gotten it. Attorney General?
Yes, Madam Chair. I just instinctively contemplated on Section 66 of the Constitution, and that reports that the central bank itself produces a report to the Parliament. So I had asked the technocratic team to just have a look at that. But Madam Chair, this particular report is just as stated, that it goes to the minister. It's of course discoverable in a number of ways, but the central bank has a broad general reporting requirement pursuant to Section 66 of the Constitution.
All I'm saying, Attorney General, through the Chair, is that these are very powerful responsibilities, and for us to avoid any possibility of any difficulties that may emerge in the future, I feel that if we have an oversight
I do
here,
catch, Madam Chair, let me be a little bit clearer. The Central Bank Act itself provides that reports of the central bank must come to the Parliament. So this feeds in to the central bank. The central bank reports to the minister, but the central bank must lay its report in the Parliament via the Minister of Finance pursuant to the Central Bank Act and the Constitution.
Senator Shriki Soon.
Thank you, Madam Chair.
53 of the Central Bank, and it's Section 53 of the Central Bank Act.
Right, Madam Chair, in my contribution, I made a recommendation for clause 10, clause 10 sub 3, and it was just in terms of a minimum time frame to be specified. Now, I understand the complexity of the bill and what's going on here, so all I would like is an undertaking, as the Minister, in her wrap-up, that the recommendations be considered at an appropriate time, and that once it can be reviewed and probably improved at a later date, I will be okay with that, to all the recommendations that I would have.
Madam Chair, I'm perfectly capable. I do hear and understand the Honourable Senator's recommendation. Exactly as we did in the House of Representatives, we do undertake to have a look at all of the representations. I personally have spent 7 years drafting this law across several committees and 5 bills with many hundreds of hours of technocratic assistance. And what we intend is to certainly have a continuous view of these positions. So we are taking careful note, and we do believe that there ought to be amendments sometime in the future, because as we put this into operation, we're certainly going to have the need for that. So we do undertake that.
may I ask the Attorney General, where would you want to advise me as it relates to products and services provided by the insurance companies should undergo the approval of the central bank? Do you think that, for instance, because of our past experiences, through you, Madam Chair, in Clause 10, there should be some provision? We haven't reached Clause 10?
Yes, we have.
Yeah, well,
go ahead.
I am there. I'm asking the Attorney General, through your good self, whether, for instance, we shouldn't have a provision where we want a more stringent control over the products and services offered, and seeing that the central bank would be the agency responsible for administering and regulating this institution. Wouldn't you agree with me that there's need for some provision under this section?
I do agree that there is need, and in fact I can point to the fact that the bill specifically treats with approval of all products and services, not only from the insurance companies but from the intermediaries. There's a full section on that. For instance, if we were to look to Part 9 of the Pension Fund Plan, you can see that in clauses 216 to 229. The general insurance provisions are covered in Part 8 of the bill in clauses 211 to 215. And similarly, right through provisions relating to insurance, industrial life provisions, etc. So we've taken the approval process for each segment and each actor separately inside of the architecture of the bill. So there is all of that that feeds in. The power functionality, duties and powers of the inspector, which is set out at Clause 10 of the bill, stands atop the obligations for approval of all products, all services, and all persons, including intermediaries, in the context of the structure of the bill.
I'm not too convinced about that, I must tell you, but I wouldn't detain the proceedings, Madam Chair. I just want to ask the Attorney General, through you, Madam Chair, where are we placed? Where can I find the independence of the... I'm suggesting that the Ombudsman, the Financial Ombudsman, should have a little more independence in this whole exercise. Because seeing that the Ombudsman deals with not only banking services, now dealing with insurance services and products. When a customer, a citizen, a policyholder comes before that particular body or officer, because that officer is employed by the governor of the central bank, and the central bank is responsible for regulating this industry, I see a conflict of interest between the financial ombudsman, who is an employee of the bank, and this individual who is supposed to be looking after the interests of the customer, the policyholder, and the consumer.
Senator Mark, could we deal with that? These clauses 7 to 18 do not deal with the financial ombudsman. So could we flag that for later on in the bill for wherever it is relevant?
Well, I don't know if it is located.
Well, Madam Chair, I could answer this immediately.
Yeah.
The concept of an ombudsman and the feature of a financial ombudsman has no place in this bill, because it is not intended to have a place in this bill. It stands entirely apart from the architecture of this bill. This bill, in the 282 clauses, several schedules, and 11 regulations, treats with an entirely other end of the spectrum, and therefore one is removed from any conflict of position rules because they are not conflated together in the architecture of the bill, and it is for that very reason that they were kept separate.
So, Honourable Senators, the question is that clauses 7 to 18 now stand part of the bill. Those in favour say aye.
Aye.
Those against say no. The ayes have it. Clauses 7 to 18 now stand part of the bill.
Part 3, clauses 19 to 109.
Honourable Senators, the question is that clauses 19 to 109 stand part of the bill. Honourable Senators, the question is that clauses 19 to 109 now stand part of the bill. Those in favour say aye. Those against say no. The ayes have it. Clauses 19 to 109 now stand part of the bill. Honourable Senators, the Senate will resume so that we can proceed with the motion. So the committee is now suspended.
Thank you very much, Madam President. Madam President, in accordance with Standing Order 14.5, I beg to move that the Senate continue to sit until the completion of the business at hand.
Honourable Senators, the question is that the Senate continue to sit until the completion of the business at hand. Those in favour say aye. Those against say no. The ayes have it. The Senate will continue to sit until the completion of the business at hand, and the Senate will now resume into committee.
So we just finished from the 9th, so we're going to do part 4. Yeah? Part 4, clauses 110 to 141.
Honourable Senators, the question is that clauses 110 to 141 stand part of the bill. Honourable Senators, the question is that clauses 110 to 141 now stand part of the bill. Those in favour say aye. Those against say no. The ayes have it. Clauses 110 to 141 now stand part of the bill.
Part 5, clauses 142 to 154.
Honourable Senators, the question is that clauses 142 to 154 stand part of the bill. Honourable Senators, the question is that clauses 142 to 154 now stand part of the bill. Those in favour say aye. Those against say no. The ayes have it. Clauses 142 to 154 now stand part of the bill.
Part 6, clauses 155 to 156.
Honourable Senators, the question is that clauses 155 to 156 stand part of the bill. Honourable Senators, the question is that clauses 155 to 156 now stand part of the bill. Those in favour say aye. Those against say no. The ayes have it. Clauses 155 to 156 now stand part of the bill.
Part 7, clauses 157 to 210.
The question is that clauses 157 to 210 stand part of the bill. The question is that clauses 157 to 210 now stand part of the bill. Those in favor say aye. Aye. Those against say no. The ayes have it. Clauses 157 to 210 now stand part of the bill.
Part 8, clauses 211 to 215.
The question is that clauses 211 to 215 stand part of the bill. The question is that clauses 211 to 215 now stand part of the bill. Those in favor say aye. Aye. Those against say no. The ayes have it. Clauses 211 to 215 now stand part of the bill.
Part 9, clauses 216 to 229.
The question is that clauses 216 to 229 stand part of the bill.
May I ask,
Senator
Madam
Mark?
Chair, through you, to the Attorney General and the Minister, is there any timeline the government is contemplating to bring standalone occupational pensions plan, bill, or legislation to Parliament? This is a purely temporary measure that has been in existence, as you know, for however long. Could you indicate to us, through the Chair or through the Attorney General, is there any intention on the part of the government to treat this thing
Madam
via
Chair,
the central bank as it relates to a standalone piece of legislation on pensions?
Madam Chair, I thank the Honourable Senator for the question, and it is indeed a very important issue. There is a considerable amount of consultation that is afoot right now, because this obviously affects not only the product, the players, but also the intermediaries, including the discussions between the trade unions and the government, etc. There is, of course, the living survey and the aging population survey factors that contribute. The Honourable Minister in the Ministry of Finance alluded to the fact that we have an aging population with a decreasing birth rate, which obviously causes a pension issue. So the dynamics of pensionable aspects and the basic requirements, contributory versus fixed or defined term, other aspects are still in discussion. I should say that the next work product that is of most immediate priority concerns almost 7% of the financial services sector, and that is the credit union sector. That is the work product that has been in short discussion in our country for close to 30 years right now, but which contributes a huge sum in terms of a percentage of the GDP. In those circumstances, I couldn't commit to an immediate time frame for the standalone position. It is something that the population must consider, but I would think that the next and most important work product is in fact the credit union sector as a more urgent priority.
You know, Madam Chair, I would have thought that the AG would have made my argument, which I thought he has made. He has said that the aging population is a crucial factor, and 10% of the aging population, 10% of the population could find itself between 60 and above in the next period, and maybe a little above that. That should telegraph to us and to the government, if the government is serious, of the need to deal with pensions as a matter of emergency. Because that is going to... Look, for example, Madam Chair, without detaining you, we all know the crisis that the government would face as you get more and more people retiring from the public service. That pension that we have to service, that is the government of Trinidad and Tobago and taxpayers, that bill is just going to be expanded and get bigger and bigger. So I would have thought, Madam Chair, that the whole thrust of the government would either be to come with a defined contribution pension arrangement, a contributory where people pay a certain amount, either look at increasing the retirement age, but all these things are captured in a standalone pensions plan. Okay. So to tell me that, for instance, this credit union is the next one.
Senator Mark, I think, though, that you've asked a question, the Attorney General has answered it, but really and truly that discussion is not about the details of this bill as it is right now. So could we just move on, please?
Madam Chair.
And your answer, the response of the Attorney General is noted.
I need 10 seconds to add something further. Had we inherited a significant body of work from my predecessors, we could have been better assisted. So we must unfortunately start in a better position at this point.
You see,
so my learned friend should be managed.
So, Honourable Senator,
Madam Chair, before you put the question,
yes.
Clause 225.
Yes.
We are dotting the I's here. Every trustee and the secretary of a registered plan commits an offence. It cannot be that every trustee commit an offence. Grammatical. So we refer to 225.
It is conjunctive. It is both. So it is every secretary, every trustee, and the secretary of a registered plan commit an offence. It's properly stated.
So, Honourable Senators, the question is that clauses 216 to 229 now stand part of the bill. Those in favour say aye. Those against say no. The ayes have it. Clauses 216 to 229 now stand part of the bill.
Part 10, clauses 230 to 249.
The question is that clauses 230 to 249 stand part of the bill. The question is that clauses 230 to 249 now stand part of the bill. Those in favour say aye. Aye. Those against say no. The ayes have it. Clauses 230 to 249 now stand part of the bill.
Part 11, clauses 250 to 261.
The question is that clauses 250 to 261 stand part of the bill. The question is that clauses 250 to 261 now stand part of the bill. Those in favour say aye. Aye. Those against say no. The ayes have it. Clauses 250 to 261 now stand part of the bill.
Part 12, clauses 262 to 265.
The question is that clauses 262 to 265 stand part of the bill. The question is that clauses 262 to 265 now stand part of the bill. Those in favour say aye. Aye. Those against say no. The ayes have it. Clauses 262 to 265 now stand part of the bill.
Part 13, clauses 266 to 282.
The question is that clauses 266 to 282 stand part of the bill.
Yeah, Madam Chair.
Senator
Just
Mark.
wanted to ask my colleague and friend, the Honourable Attorney General. May I ask the Honourable Attorney General whether he would give any consideration when he's tidying up this in the future to addressing this whole question about review? I honestly feel, and that is why the Canadian experience is so telling, the Canadians, while they never experienced any challenges during the financial meltdown, what they have stuck into their legislation, Madam Chair, is a provision to review their legislation every so often, if it's every 3 years or maximum of 5 years. So their legislation is always constantly under review, particularly of a financial nature. So I was thinking, Madam Chair, whether the Attorney General would not give consideration to that provision, whether he can do it now, but it's something that I really think that we ought to consider if you want.
Sure. Madam Chair, I thank...
No, Senator Mark, Attorney General.
I thank my learned friend for his very useful submission. In fact, it's something that the Minister of Finance also told me he found quite interesting. It is something that we would certainly consider. It hasn't been the best used provisions. For instance, the Dangerous Drugs Act has a provision that the law is to be reviewed every 5 years. It has never been reviewed. I have it on the clock. Successive parliaments have sat and it has not been treated with. The 6th, 7th, 8th, 9th, 10th Republican parliaments have never looked at the law. So it's very useful. I think that as we get this system of justice moving faster and the case law begins to come faster apace as we're headed in that direction. But it is something we will certainly take under advice.
So the question is that clauses 266 to 282 now stand part of the bill. Those in favor say aye. Aye. Those against say no. The ayes have it. Clauses 266 to 282 now stand part of the bill.
Schedules 1 to 6.
The question is that schedules 1 to 6 stand part of the bill. The question is that schedules 1 to 6 now stand part of the bill. Those in favor say aye. Aye. Those against say no. The ayes have it. Schedules 1 to 6 now stand part of the bill.
Schedules 7 to 12.
The question is that schedules 7 to 12 stand part of the bill. The question is that schedules 7 to 12 now stand part of the bill. Those in favor say aye. Aye. Those against say no. I think the ayes have it. Schedules 7 to 12 now stand part of the bill.
Preamble.
The question is that the preamble to the bill be approved.
Please wait for a second. 2012.
Madam Chair, I was just double checking. There's been a consequential renumbering, so we're at 12. In the previous version, there was a 13, which is the amendment to POCA. Just out of caution, may I ask the clerk through you, Madam Chair, whether Schedule 12 is a reference to the consequential amendments?
Yes.
Yes?
Yes.
Much obliged, ma'am. In that case, I apologize.
The question is that the preamble to the bill be approved. Those in favor say aye. Aye. Those against say no. The ayes have it. The preamble to the bill is approved. Honourable Senators, the question is that the bill be now reported to the Senate. Those in favor say aye. Aye. Those against say no. I think the ayes have it. The bill will now be reported to the Senate. Minister in the Ministry of Finance.
Madam President, I wish to report that a bill entitled An Act to Repeal and Replace the Insurance Act, Chapter 8401, to reform the law relating to insurance companies, to regulate insurance businesses and privately administered pension fund plans, and for other related purposes, was considered in the Committee of the Whole and approved without amendments. After 7 years of the Attorney General's hard work, I now beg to move that the Senate agree with the committee's report.
Honourable Senators, the question is that this Senate agree with the committee's report on a bill entitled An Act to Repeal and Replace the Insurance Act, Chapter 8401, to reform the law relating to insurance companies, to regulate insurance businesses and privately administered pension fund plans, and for other related purposes. Those in favor say aye. Aye. Those against say no. The ayes have it. Minister in the Ministry of Finance.
Madam President, I beg to move that a bill entitled An Act to Repeal and Replace the Insurance Act, Chapter 8401, to reform the law relating to insurance companies, to regulate insurance businesses and privately administered pension fund plans, and for other related purposes, be forthwith read a third time and passed.
Honourable Senators, the question is that a bill entitled An Act to Repeal and Replace the Insurance Act, Chapter 8401, to reform the law relating to insurance companies, to regulate insurance businesses and privately administered pension fund plans, and for other related purposes, be now read a third time and passed. Those in favour say aye. Aye. Those against say no. The ayes have it. This bill, Honourable Senators, requires a 3/5 special majority, so the clerk will now conduct a division.
Mr. Khan?
Yes.
Mrs. Batiste Primus?
Yes.
Mr. Rambara?
Yes.
Mr. Sinanan?
Yes.
Mr. Lehunt?
Yes.
Ms. West? Yes. Dr. Henry?
Yes.
Mr. Singh? Yes. Mr. Cummings? Yes. Mr. De Freitas?
Yes.
Mr. Huggins?
Yes.
Mr. Simonet?
Yes.
Ms. Romano?
Yes.
Ms. Lewis?
Yes.
Mr. Mark?
Yes, thank you.
Ms. Haynes?
Yes.
Ms. Amin?
Yes.
Mr. Ubika?
Yes.
Mr. Zakur?
Yes.
Mr. Sobers?
Yes.
Dr. Mahabir?
Yes.
Mr. Roach?
Yes.
Mr. Small?
Yes.
Mr. Shriki-Soon?
Yes.
Ms. Ramkisoon?
Yes. Thank you.
Mr. Richards?
Yes.
Mr. Duke?
Yes.
The result of the division is 27 for the bill, 0 abstentions, and no one against.
Honourable Senators, 27 members voted for the bill, no one voted against the bill, no one abstained. The bill has therefore been passed with the requisite majority.
A bill entitled An Act to Repeal and Replace the Insurance Act, Chapter 8401, to reform the law relating to insurance companies, to regulate insurance businesses and privately administered pension plans, pension fund plans, and for other related purposes.
Leader of Government Business.
Thank you very much, Madam President. Madam President, I beg to move that the Senate do now adjourn to Monday, the 21st of May, 2018, at 1:30 p.m. That will be Private Members' Day, and I'm informed by the opposition that we'll be doing private motion number 2, which has to do with the EBC.
Senator no, Honourable Senators, before I move the adjournment, there are some matters that have been approved. Senator Mark, how many are you treating with? One. And Senator Mean, 1. So 2 matters have been approved. Senator Mark.
Yes, thank you very much. Madam President, as a citizen of this republic and as a parliamentarian, I am deeply concerned about law and order and stability in our society. Hence the reason I've raised this matter dealing with the issue of accumulated vacation leave by the current acting Commissioner of Police. Madam President, I read with some degree of concern in one of the dailies dated Monday the 16th of April 2018, the news that the current Commissioner of Police, Stephen Williams, is about to, well, in fact, has received his 13th extension as acting Commissioner of Police, and is supposed to, that is supposed to end, I believe, sometime October or before. Now, Madam President, I also understand that the acting police commissioner of police has some 2 years or a little above of vacation leave that has accumulated, that once consumed would lead him to a 60th year. And that is supposed to take place, if I'm not mistaken, at the end of October of 2018 or before. So it is of grave concern as to what will occur after October of 2018, having regard to the fact that I read somewhere, and maybe the Minister of National Security can advise, that the government's policy is not to buy out vacation leave of public officers. If they have leave inside, they must proceed on their vacation leave. In this instance, Madam President, as I said, the Commissioner of Police, Stephen Williams, has about 2 years and above vacation leave inside. And the question, therefore, has to be posed. You would have read, and I would have read, where the government established a select committee, a special select committee, and that committee has reported, it is now public knowledge, that a majority of that committee had a decision, took a decision on the way forward. And by majority, the government has rejected the whole question of the selection of candidates for the position of Commissioner of Police and Deputy Commissioner of Police, in accordance with some notifications submitted by this particular committee. Now, the question that has to be asked in light of what I've just outlined, Madam President, is that if the government has rejected this notification arrangement as it relates to both the Commissioner of Police and the Deputy Commissioner of Police, it therefore means that the government has before it the matter of the current Commissioner of Police, who is supposed to go on leave, according to my information, by October or before of this year. Now, Madam President, if the government does not buy out the vacation leave of the current Commissioner of Police, how would that impact on police stability and law and order in Trinidad and Tobago? Because the government has rejected the recommendations of the Police Service Commission. So they have rejected the proposed Commissioner of Police, a fellow called Deodat Dulal Chan, and they have also rejected the Deputy Commissioner of Police.
Senator Mark, please have a seat. These matters, the matters of the appointments, those matters are under consideration right now, so we shouldn't really be making any reference to it.
So what I'm saying is that it's against being guided by you. I'm asking the government what is the policy forward? You know, as we head towards October and this matter of the leave and the Commission having 2 years inside, how is the government going to treat with this particular situation? And I agree with you, Madam President, it's still before another place, so the government can change its mind, and maybe we will have a new Commissioner of Police shortly. But for the time being, the country would like to know what is the way forward. Because I believe that you have to plan these things in advance. And I'm reading in the papers where this gentleman, the Commissioner of Police, is supposed to proceed on vacation leave after this 13th extension. And the government, unless I am wrong, has a policy on they are not purchasing, they are not buying out vacation leave of any public officer, including the Commissioner of Police. So I am saying, Madam President, we are between a rock and a hard place until we get the final results at the level of the House of Representatives, as you have advised on this report that is before that House. So it's against this background, I believe that the population would want to get some answers as to the way forward. And I hope that the Honorable Minister of National Security can provide this Honorable Senate and the nation with the way forward on this matter. Because we would not like Trinidad and Tobago to be plunged into a crisis as it relates to policing, law and order, and stability in this nation. So we would want the Honorable Minister, through you, Madam President, to decide this. Because as you know, the Police Service Commission has no role to play in terms of policy, a decision to buy out leave of a police commissioner. That is not the role of the Police Service Commission. That is the role of the government, and the government has to indicate in no uncertain terms. There's no wriggle space or room any longer. The government has to take a decision as to whether it is going to buy out the leave of the current Commissioner of Police, or the government is not going to buy out the leave of the current Commissioner of Police. Let them tell this country what they are doing. But you see, we on this side like to look at the future, because we are not waiting until, Madam President, for October to arrive or September to arrive and we don't have a Commissioner of Police. We need to know that now. And that is why we have raised this matter to get some clarification, Madam President, from the government on this particular matter. So I'm looking forward to getting some answers from the Honorable Minister of National Security on this matter. Thank you very much, Madam.
interest of national security.
Thank you, Madam President. Madam President, I'm reminded of a verse from Desiderata that said, avoid a loud and aggressive persons, their vexation to the spirit. Today I will keep my spirit, Madam President. Madam President, the motion seems to speak about the government urgently addressing the issues relative to the acting police commissioner. But let us remind the country that is in 2012 that the then substantive commissioner of police, Dr. Dwayne Gibbs, demitted office. Since 2012, the present acting commissioner of police has been acting. To date, he's been 13 times since he's been acting, and it was based on 2012. The then UNC government never took the time to rectify the matter, to move from acting to look towards the future. Now Senator Max is talking about the future. 2012, 2013, 2014, they did nothing whatsoever to treat. No, I'm keeping my spirit cool. Avoid loud and aggressive persons. Avoid loud and aggressive persons. They're vexation to the spirit. So, 2012, 2013, Madam President, they did nothing to treat with the issues of the police commissioner. All of a sudden, there's urgency in Senator Max's submission. It was this government, when we got into power, took measures to treat with rectifying the whole question of the substantive police commissioner. We tried to rectify the matter. What happened? His administration took it to court and again stymied the process, Madam President. Where's the urgency then? There was no urgency to treat with the matter. Where was the voice? Where was the voice then? And as a matter of fact, it was the then Attorney General who said to this country that it was better to have an acting commissioner of police than substantive because he could manipulate the acting commissioner of police. Where was the voice then? And he said it publicly. Publicly, Madam President. There was no urgency then. As a matter of fact, Madam President, this commissioner of police who has accumulated leave. No, you want the government to interfere when you yourself question government interference. This government will interfere with the policies. This government will interfere with that. But I'll tell you something, that Madam President, the acting commissioner of police has accumulated leave, and he's about to go on leave from September this year. But the onus is on the Police Service Commission. Like any other position, any jurisdiction, if a substantive holder goes on leave, there's an acting arrangement that takes place, and the Police Service Commission is the only body that can treat with the appointment of Commissioner of Police and Deputy Commissioner of Police, Madam President. Not the government. Not the government. That's it. So, Madam President, I believe that the motion that Senator Mark is bringing is out of context and out of relevance, because the only body right now, out of time to a large extent, as it stands right now, the positions of Commissioner of Police, Deputy Commissioner of Police reside with the Police Service Commission, and they will so act in time, Madam President.
Senator Amin.
Thank you, Madam President. Madam President, the Children's Life Fund Act 2901, an act to establish the Children's Life Fund as a charity, was assented to on the 13th of December 2010, and it came into operation on the 17th of December 2010. The mission of the Children's Life Fund is to provide funding for children and support for children and with life-threatening medical conditions while enriching families with hope and strength. And their vision is for every child, an extraordinary journey into tomorrow, life in its fullness. The Children's Life Fund is a charitable organization that provides funding to children who need life-saving medical treatment abroad. And to date, we have had well over 235 cases that were approved and treated with. My motion this evening, Madam President, deals with the failure of the government to appoint directors to the Board of Management of the Children's Life Fund for the general administration and management of the affairs of the authority, according to Section 5 of the Children's Life Fund. Madam President, the qualifications of persons who apply for grants are well established in the public domain, such as they have to be under the age of 18, that is a child. They have to be citizens of Trinidad and Tobago. They must be referred by medical specialists in the particular field of treatment required, and the treatment that they are seeking must be unavailable locally to justify them having to go to another country. The procedure must also be life-saving, so their illness should be life-threatening. And in terms of the financial qualifications, the medical expenses should not exceed 25% of the income of their families. There was, Madam President, at the time of the establishment of the Children's Life Fund, it gave an opportunity for any ordinary citizen to contribute to saving the life of a child. And in fact, I remember that under the then government, which this was established, in fact, this was a vision of Kamla Prasad Bisesa, all of the ministers and all of the parliamentary secretaries gave 5% of their salaries to the fund, except the Prime Minister, who gave 10% of her salary during her term in office, and the deductions were made from their salaries. Of course, members of the opposition at that time had the opportunity to make such contributions, but they did not. In fact, they refused. But by the beginning of January 2015, the Children's Life Fund had totaled $44 million, thanks to those persons who contributed, but you had the Prime Minister and her MPs donating a substantial amount. But you also had the opportunity for NGOs, corporate groups, and individuals to have, in terms of that sense of pride, where they could contribute to saving the life of a child. Recently, we have had in the media a number of reports which are of concern, because when you see one instance, you kind of hope that it's rectified, and then you see it happening over and over again. And I remember earlier, sometime last year, there was a very sensational issue where a 3-year-old Shannon Luke was denied assistance from the Children's Life Fund. And
President, that matter is sub judice, and before the courts, I urge caution.
Madam President, the financial assistance was denied to the family. No, it is.
Yes, Senator. I mean, you've made reference to that already. Could you just continue with your presentation?
Madam President, this motion is 5 minutes. I'm aware of the legal issue. This motion is only 5 minutes, and I'm sure the minister will have 10 minutes. The minister will have his 10 minutes to reply. I want to tell the minister that my motion is not an attack on you. Please don't take it personal. I really want this issue to be ventilated in the interest of all potential applicants, and in fact to all of Trinidad and Tobago. Madam President, there was also the issue of a little Halima Mohammed. And in that situation, when they applied, they were told that the illness was not life-threatening. And in fact, when you had the illness was Taslima, which caused...
President, that matter is before the court. The case of Halima is before the court, taken by the UNC. The matter is sub judice, taken by Gerard Ramdeen.
Minister, please, just a second. Senator Amin, you can make reference to the matter without going into the details, okay? All right, so you have a few more minutes. Just continue your contribution.
Madam President, I know they want me to wrap up this matter quickly to go home, but I want to, Madam President, I also want to make mention of an instance where there was a young child by the name of Naveen Haripasad who was waiting for the legal advice from the Office of the Attorney General on the question of interpreting the law with regards to the Children's Life Fund for his application. But, Madam President, when we see all these things happening in the public domain, the question comes up in terms of what is the condition of the Children's Life Fund. And in doing some inquiries, Madam President, it has come to my understanding that the board of the Children's Life Fund has not been has not been fully appointed. In fact, there are probably about 4 members, I think 4 or 5 members who are operating at this time. And the issue comes up because the legislation indicates that the board must comprise of 9 members. So you have no medical practitioner as required by law. I'm subject to correction. You have no medical practitioner, which is required. You also do not have a member, public officer nominated by the Tobago House of Assembly. And I know that efforts have been made to get the Tobago House of Assembly to make an intervention. There's a need for a senior public officer nominated by the person with responsibility for Tobago affairs, whoever that minister is. So I am asking for the information of the public. You also have requirements for persons from varying fields of expertise: health, finance, investment, business management, law, and social work. So in my view, the board does not even have enough members to form a quorum at this time. So therefore, they cannot legally meet. And I want to ask the minister, please, in your response, there's no need to take my bringing this motion to you today personally. You may yourself face challenges in finding the persons to appoint to this board. And I trust that you will use this opportunity to ventilate this issue responsibly. Thank you.
Thank you very much, Madam Speaker. Madam Speaker, Madam President, let me deal with many of the issues, and let me deal with the substantive issue first. This Minister of Health took a note to Cabinet in December of 2017. This is 6 months ago to fill the board. Cabinet, by minute number 2262 of 2017, approved the nominees for the board. It went, all 9. It then went to the Solicitor General's office, where the Solicitor General found objection to 1 person from the THA. The Solicitor General, in her wisdom, did not approve the members of the board as submitted by the government until the THA sent another person. I have no control over that. The THA subsequently, because it's a very specific position, it's a very specific qualification, and because of the publicity that the UNC has brought to the Children's Life Fund, it is now difficult to get people to serve on the board because they are afraid of public exposure, because you all threaten to sue the people individually and personally, especially Dr. Maritza Fernandes. Correct. So you have scared people from serving on this board. And the Solicitor General is a public officer whom I cannot override. We subsequently got a nominee from the THA. That nominee will go to the Cabinet next week for approval. Once that is done, there should be a board. But I acted responsibly in going to the Cabinet in December 2017. It talks about the funding. May I inquire as to why government ministers, when they became opposition members, stopped contributing to the Children's Life Fund? Why? Why?
Zero. for 2016, 15.
When the ministers were contributing, their contribution to the Life Fund was less than 0.05% of the fund. Do you know that? It was just a puppy show. The vast majority of funding comes from the taxpayer via the consolidated fund. And you need to know that. There was hardly any contribution from corporate Trinidad and Tobago, although when Caribbean Airlines was bankrupt, there was a nice check with the honorable member for Siparia receiving a check from Caribbean Airlines for $50,000 US, which never materialized. That was the puppy show of the Children's Life Fund. Corporate Trinidad and Tobago stopped contributing to that fund very early in the game. It is the taxpayer that contributes to that fund. As far as approving applications to the fund, because we don't have a full board, we have some members. My legal advice is the minister, using the doctrine of necessity, can approve applications sent to it from the Life Fund unit. And to date for this year, the minister has approved 12 cases. The average number of cases for the Children's Life Fund since inception is between 25 to 30, so I am well on track to approve all cases that will come to me. From September 2015 to now, Madam Speaker, because the UNC will go on a Monday night forum and say no Children's Life Fund. Let me put it in the public domain. Let me put it in the public domain that since September 2015, because you see the Monday night forum is not a place for truth.
To which member?
To which member? Thank you. I did not call a member. I said the Monday night forum is not a place for truth. That's what I said. If that offends you, that is too bad for you, young senator. But the Monday night forum is a place for bacchanal and inebriation.
What that has to do with the question?
So from September 2015 to now, under the People's National Movement, we have approved 80 cases to the Children's Life Fund, 80, to a value of $25 million. So let this be said at the Monday night forum, where the gray goose flies high. From September 2015 to now, we have approved 80 cases via the Children's Life Fund. That is 80 children, and I'm glad Minister Amin is using the word life-threatening. And that is key to understanding the Children's Life Fund. It is for life-threatening conditions.
We did not lay down those conditions.
That's right. To a grand total of $25 million. So, Madam Speaker, Madam President, in closing, because I have, Madam President, I must admit, I am surprised at the quality of the information given to Senator Amin by her whistleblower. It was obviously deficient. And I think Senator Amin should get a refund from that whistleblower, because that whistleblower does not have the information. So the information is, as I recap, the Minister of Health took a note to Cabinet in December 2015 to fill the board. The Solicitor General did not approve any of the recommendations, pending a second nominee from the THA, which came just recently, which will be taken to Cabinet next week. And in the interim, under the doctrine of necessity, the Minister of Health for 2018 has approved 12 cases and will continue to approve until a board is in place. Thank you very much, Madam President.
Honourable Senators, the question is that this Senate do now adjourn to Monday, the 21st of May, 2018 at 1:30 p.m. Those in favour say aye. Those against say no. This Senate stands adjourned to Monday, the 21st of May, 2018 at 1:30 p.m.